Hey guys, I just wanted to jump in for a second and let you know a little bit about today's live stream sponsor, DNA Funded. DNA Funded has very generous profit sharing up to 90% and 3 different unique challenge types. For those looking to get funded, they also have speedy payouts, unlimited trading days on the first and second phase of their challenges, a very wide list of different things you can trade with over 800 different assets tradable, and maybe the most important component, a very experienced team behind the whole operation. So if you're interested in learning more about DNA Funded, click the link, check it out, see if it's right for you, and make sure to do your own due diligence to see if what they have to offer fits your trading style. For 20% off, you can use code A1T20. Again, that will be 20% off any of their challenges you'd like to check out. Thank you again to DNA Funded for sponsoring today's live stream. Now back to the show. All right, everybody. Good morning. Welcome back to another live stream. Let me just move this camera. I swapped out a camera here at home. It's a little higher quality. Sorry, hopefully you're not getting dizzy out there. Okay, there we go. Hope everybody's doing well. We just had ADP numbers come out just a moment ago. Came in worse than expected. Actually, pretty good sized miss, to be honest. Pull that data up in just a second. Okay, so if we take a look at our ADP numbers that just came out, pretty big miss here, guys. We had, where did I just go? Here it goes. ADP big miss, 37,000 compared to the forecasted 111,000. It's a pretty big miss in terms of ADP non-farm employment change. What is this number? Well, we can read about it here. It's the estimated change in the number of employed people during the previous month, excluding the farming industry and government. This data provides an early look at employment growth, usually 2 days ahead of the government-released employment data that it's designed to mimic. How accurate is it in terms of predicting an FP? It's been all over the place. However, let's go take a look at historically, like how has, if I go labor data statistics really quick and go ADP, let's take a look at this. Yeah, so, oh wow, look how fast the edge finder pulled that in today. Low key, one of the weakest points of our product. And I'm, not afraid to point out the strengths and weaknesses. I think the edge finder has a lot of strengths. One of the weaknesses is it's not like real time. Like it's not like data snaps and then the data pulls into the edge finder instantaneously. It's not very real time, which, it's a weakness of the product. It's got many strengths, but that's one of the weaknesses. Real-time data is really difficult. It's very, very difficult to get real-time data for such a wide set of stuff on so many different assets. Anyways, we just had this data come out, and like I said, I'm shocked. I guess it's on the 15-minute timer for ADP numbers that pulled in right at the time. But check this out. You've got 37,000 jobs compared to the forecasted 111,000 jobs. That is a huge miss. And the previous one was a big miss. So we've got two back-to-back misses in terms of the ADP employment numbers. This was a bigger miss than the previous one. However, why I say, be careful reading too far into that is take a look at NFP. The last two times has come in better than expected. Cheryl says she has a really bad flu. Sorry to hear that. Or past few days. Sorry to hear that. No, we knew Cheryl's was coming back. Nice shirt. Thank you very much. Got the A1 Trading branded t-shirt today. Yeah, not a great number. ADP numbers coming in really soft here today. But this is important, guys, because it's very easy to look at one number in isolation. And I remember years ago when I was like first kind of starting to really dive deep into the macro fundamental analysis stuff, before I had anything that would visualize it all for me, like tools like this. I know it sounds like a sales pitch, but I mean this seriously. Like, don't even buy our product. This is still valid. The concept of like overvaluing one single report is really dangerous. So like if you're looking at ADP and you're like, oh my gosh, this is it. The whole market's going to crash because ADP numbers. Well, back it up and let's actually look at things from a holistic perspective. And what we can see is that, there's many indicators here that we want to focus on at the same time. We don't want to just look at one indicator ever when it comes to economic data, when it comes to fundamental or sentiment data, when it comes to technical analysis, right? Confluence is not something that's exclusive to technical analysis, right? We want to use confluence in all areas that we possibly can. If you have indicators that are important to the state of the US economy, why wouldn't you want to broaden your understanding and scope to account for stuff that matters? So like, let's look at the holistic view for a second. We say, well, CPI came in really nice in May for the month of April. It's a report for the previous month, of course. Producer price index, like you have some good stuff here. I'm specifically talking about like risk assets, like stocks. Like stocks prefer cooling inflation and decent growth in the economy, or strong growth in the economy, right? So we're still looking pretty good in terms of this list for stocks in general. So if I take a look back at the price response to this, yes, we did see some downside here, a little bit of weak jobs data, and that is to be expected considering yesterday we were up on some good jobs data. So here is something I want us to think about as we get closer to Friday, right? So we have a couple things. We have 4 items. JOLTS job openings. This week we get a lot of jobs data. So let's map out our agenda here. Okay, so here's what we're working with this week, guys. So far, we have had JOLTS job openings come in very strong. Today, we had ADP numbers come in very weak. So it would be natural to say, okay, we have this on Thursday. We have these two on Friday. So we get the big one on Friday. We get unemployment rate. We get NFP. Those 2 variables are going to come in at the end of the week. Well, so far this week, what have we got? We've got kind of a mixed report in terms of labor, because you had a great job openings report, very, very strong numbers from job openings, and now you have a weak ADP number. So again, this is where we want to look at things holistically. If we're going to be trading this stuff, if we're going to say, okay, this is bullish or bearish for US dollar, this is bullish or bearish for gold, this is bullish or bearish for indices, right? If we're going to be making kind of a holistic view, we don't want to just look at ADP or just look at job openings, because that's kind of disingenuous to what we're supposed to be doing here. We're supposed to be analyzing the state of the economy and what the Fed is likely to do next based on these stats. So ADP, right? What is that looking like? Well, that's weak. Job openings look strong. How are unemployment claims going to come in this week? That's actually really, really key, because last week, unemployment claims came in higher than expected. So this week we are forecasting for 236,000 unemployment claims. What you really would like to see, if you're like a stock market bull, can we undercut that a little bit? Can we get a little softness compared to that? What we don't want to see is this number turn into this kind of flat. Like, part of the bull case here for stocks is this horizontal line that I just drew, right? Unemployment claims have not spiked, despite all the worries about tariffs and all the worries about recession and all that stuff. All of that stuff, to me, you know, a good friend of mine, he may be watching the stream. He watches the streams frequently, my friend Garrett. We've talked about this for a long time, and it's a really interesting and simple concept. If you're somebody who watches stocks, Bitcoin, risk assets in general, or gold, by the way, for a different mannerism, if you have stuff, the labor market holding steady, people are employed, they can pay back their debts, they can buy new things, they can stimulate the economy. The economy is okay for the most part if the labor market is strong. But if you start losing that story, then we've got problems. If the labor market starts to materially weaken, then you've got, in my opinion, a very strong bull case for gold and a very weak case for stocks. That's my take on it. The labor market holds the key because, again, yes, inflation is important, but inflation's pretty much dead right now. Inflation's not the problem anymore. I mean, look at inflation. We're back to 2.3%. We're not too far off. You get any upset in the economy, and this thing's going lower from here. Right? We won't have an inflation problem. We'll have a growth problem. If you're talking about if tariffs make things way worse and people freak out and all that stuff, I don't think inflation is as big of a problem as the labor market if you get slowdown due to tariffs and CEO confidence goes down and consumer confidence. Like, if that actually materially turns into the hard data, we have a problem. But here's the thing. The news cycle has been so negative that it's really caused sentiment to be so in the dumpster. Let me show you. We can show you something pretty cool here. If I go to my market sentiment tools and I go CB consumer confidence, we had, for the first time in a while, an uptick in consumer confidence. That's a positive note. Another one that's really important for the state of the consumer is keep your eye on retail sales numbers, right? This is people going out and spending money. Are people doing that? Well, people have been forecasting, or analysts have forecasted, that this was going to go, way down, and that people were way too scared to go out and spend money. And for the last two, we've had outperformance relative to analyst expectations. So again, I see people concerned about tariffs, and the news cycle is so creepy and scary, and oh my gosh, Trump's going to ruin the world and all this. Regardless of your political thoughts on that, let's keep an eye on the data, right? I said this under Biden, I said this under Trump. It's not about the politician if you like them or not. If you're a trader, the market data can be very revealing, despite what people's, what the headlines say. Don't get caught up in that, because if you do, it's going to hurt your trading. It's really easy to make the mistake of chasing your tail with the news cycle when it comes to the markets and letting your political bias get in the way of decision making. Just trade what you see with your system and with your strategy. So if I'm looking at S&P 500, my overall view remains very confident in the S&P 500, in the NASDAQ. I currently have a long position on the Russell 2000. I'm personally watching to see today if we can break through this level of resistance. I think this looked kind of similar on the Dow Jones. Dow Jones looks really interesting. You're sitting right here at this 42,800 level. I think if you get a breakout of that zone, we are probably going to see a leg higher in this market. path of least resistance for me on the markets, like by default right now, I think we move higher. By default, what I mean by that, none of us know if in 30 seconds from now, Trump is going to tweet something and say, China is ridiculous. All bets are off. We're going back to the highest points of tariffs. It could happen at any second. None of us can predict that. And if you are somebody who thinks you can, best of luck to you, but it's really hard to do. Even if you're right, and there is some, turnaround in the story with tariffs, what if before that turnaround happens, the market drifts higher by 5%, and then that happens, and your short position is still very red, right? So my point is trying to time what Trump is going to tweet or what Powell's going to say in response to Trump. Like, you can play that game if you want, but that has never been a consistent way for me to approach the markets. What is the default? This is what I want us to be thinking about, right? What is the default direction? What is the trend price action wise? What is the sentiment out there? It goes back to what we always talk about on this channel, fundamental analysis, which is looking at the macro like we do all the time. Sentiment analysis, which is looking at crowd sentiment. We just talked about consumer confidence. We talk about the put to call ratio quite a bit and some of the timing that we can do here. We take a look at the investor sentiment survey, which will get fresh data on this at midnight tonight. So that data will update in the Edge Finder as well. So these are the things that we can look at and we can say, okay, what's the default direction here? Momentum on the S&P 500, the Dow Jones, the NASDAQ, positive. So by default, technicals would suggest momentum should continue to push higher. At least the technicals that I'm looking at, the subjectivity of technical analysis. Some other people might say, no, that's going to tell me it's going lower. But what about the fundamentals? Well, again, I have a systematic approach to tell me, not a gut feeling, not a, I think the economy is going to do. It's based on the hard data that's coming in. Is it suggesting bullishness or bearishness for stocks right now? We're getting a stronger bullish suggested impact by the economic data. We have cooling inflation. We have labor data so far this week, a little bit mixed, right? Jobless claims tomorrow will be very telling. Last week, they were a little weak, so that could turn positive for us this week if we get better than expected unemployment claims. So what's the default trade? That's what I want us to be thinking about. Is the default trade. What's the default directional bias of these markets? Barring that we don't have some crazy tweet from Trump in the next 30 seconds, right? Because we can't predict that. So what I mean by that, when I say the default trade, is like, okay, if I think the default trade is higher for the S&P 500 and I'm looking for pullbacks, right? If this is my default trade setup, what I mean by default is like, I think, assuming the world doesn't fall apart, that trade should probably hold up well. But I can't control if the world does decide to freak out and maybe move like that. That would be a crazy move, wouldn't it? If the chart would start going backwards. But I can't control when that's going to happen. It's going to happen. So sometimes my trade's just going to get screwed up by news and it's going to even out, because other times the news is going to really help my trade. So the way I see it is like, focus on the general directional bias and place the trades with small size and let your trades play out over time. Like, make more money over time than you lose money. You're going to lose money in trades sometimes. Some are going to work, some are going to perform poorly. But if you are somebody out there chasing your tail about like, what's Trump going to say next, and Powell's going to say this, and to me, that is not a repeatable, consistent methodology for trading the markets. Focusing on the macro data, focusing on the technical price action, those things, I can do those day in, day out. So if I go to the top setups page on the Edge Finder, you can see that I've got the US indices up top, Russell, S&P, Dow Jones, NASDAQ. This tells me sentiment, technicals, and economic data. I pretty much automated what we're talking about here with this tool. So when I say, okay, economic data suggests more bullishness than bearishness in our system, that's going to give us positive points, right? These points just tally up and they help to generate a bullish or bearish bias for each chart. It really strips out a lot of the kind of manual labor that goes into analyzing these things and makes it so that, okay, we're getting a summarized view. Now, if you want to go in and you want to study why a particular chart, also what is happening here, that's absolutely crazy. Okay, I'm going to have to look into that because that is definitely, hold on, I'm going to take a screenshot of this. Indices scanner. Apparently there was a update to the way some of Google's products filter certain data within the Looker Studio, which is what we built this thing in. So we've been making some adjustments. So I just sent that to our developer to take a look at. But point is, long story short, systematic trading is so key to what I've been able to achieve in the markets in terms of the consistency, the overall profitability. Like, it's so important that you get some sort of systematic approach under your belt. And many traders are not doing that. Many traders are going around and they're watching a live stream like this one or someone else's, or they're seeing somebody's tweet, or they're on Instagram and somebody's like, I'm bullish on oil, or I'm bearish on the NASDAQ. And they're just trading in the wind. They're just like grabbing onto whatever's flying past them and taking trades on it. And it's a disappointing thing a lot of times because a lot of people wish they had a system. A lot of people know that they should have a system even. Somebody is listening right now and they're like, yeah, I should be trading with like some kind of systematic trading strategy. And it baffles me that people like almost squash that voice in their head and they're like, no, I'm just going to see what looks good today and just take a trade on it. Great businesses have systems behind them. Trading profitably is supposed to be like running a business. I run a business on the software. Like I'm showing you these tools. Like I sell these things. I have a team of people. There's, I think there's around 10 of us, 9 or 10 of us, between everybody who's involved in building and maintaining and supporting members with this product. I run a small business, and I can tell you the similarities between profitable trading and running a successful business. There's many of them. You have to have systems for everything. Nothing, my dad ran a successful business too. And he always would say something along these lines. He would say, if it isn't automated, it doesn't get done. And the amount of truth of that statement is like, I learn it every year over and over and over, because life gets busier and busier, right? More things happen. Our business gets busier. People's personal lives get busier. Everything gets busier over time. That's what I'm finding, right? I don't even have kids yet. That's a whole nother thing. Someday I will have that. And that's, I hope to have that, and God willing, right? But the point is, everything gets busier. You have to automate things. If you're going to be a profitable trader, you have to automate things. It doesn't necessarily mean, I'm not necessarily saying you need to buy the Edge Finder and you need to start using it, and that's all. That's not what I'm saying. I'm saying whatever your system is, maybe you set alerts. Maybe you have a certain checklist that you somehow automate. Maybe you have an Excel spreadsheet that helps you to automate things. Whatever you are doing in the markets, I'm a huge proponent of saying that you need to automate everything that you possibly can, especially in today's world. I can totally relate to whatever you said, Nick. Yeah, thanks. I mean, it is so true. If it's not automated, it doesn't get done. Like, it's really, really, you can say in your head, yeah, I'm going to check those items before I take trades. But if you don't systematize it, everything in my life that I've had success with, I've employed a massive amount of automation to check myself. everything, right? Like scheduling emails to myself or creating systems to like remind myself of certain things, using a calendar. These are all automations. This is, I mean, maybe I'm just talking about being an adult, right? But take your trading seriously, treat it like being an adult. You have to automate and organize and journal and all these things that are hard work. Look, none of those things are easy. But you know what's harder than that is losing money for years and years and years in the market and refusing to take it seriously. Anyways, what are we looking at? Let's take a look. I just want to show everybody who is a regular stream viewer something really quick. Also, is anybody brand new to the streams? If you're a new stream viewer, I hope you're doing well. Thank you for being here and welcome to the show. Comment something in the chat. Let me know that you're a new stream viewer, and I'll try and say hello to some of you guys. Royal Trade says Trump just tweeted 15 minutes ago, ADP number out, too late, Powell must lower the rate. He's unbelievable. Europe has lowered 9 times. Interesting times, huh? Well, let's take a look at why Europe has lowered their interest rates 9 times. This might help us to understand a little bit why. Europe, the EU economic heat map, their GDP growth missed expectations. Manufacturing PMIs did beat expectations. Services missed expectations. Retail sales contracted by minus 0.1%. CPI is at 1.9% year over year, below the forecast of 2%. PPI, lower than expected. So they have really cooling inflation. They're under 2% inflation. Unemployment rate is at 6.2% in the EU. What is it in the United States? I think it's 4.3 or 4.2. So their unemployment rate is higher. So we have a really weak European economic heat map. So to me, it's no wonder they're cutting rates, right? Their economy is struggling more than ours, at least based on these metrics, right? Take a look at the US economic heat map. In comparison, it's got a 46% score. Still not amazing. Inflation is cooling, but it's at 2.3, 2.4. Now, on some level, am I just absolutely disagreeing with everything Trump is saying about we should cut rates? Not entirely. But there's a big unknown that he's operating on with some more knowledge than the rest of us. You ready for it? Trump knows more about his tariff plans than we do. And so the Fed is part of the we component of that. They're saying we don't know what tariffs are going to look like. And we also know that the economic community is largely in agreement on that tariffs will cause price hikes, taxes to the consumer essentially, and inflation. What we do not know. So let me pause there, because again, people are already up in arms who are like, well, yeah, but the criticism, however, or the debate is whether or not those tariffs would cause this type of inflation, like a one-time hike in inflation, or if it would be, or AKA transitory inflation kind of component, or if it would do this and start to kick back into gear persistent inflation. This is very problematic. This is not so bad. And we don't know which one it's going to be. So the Fed is saying we don't know how sweeping these tariffs are going to be and which scenario we're going to be forced into. So the Fed is saying we have to wait until we get more clarity on the tariffs because we know they are likely to be inflationary. We just don't know how much, right? So that's the question. That's the Fed's predicament. European Union's cutting rates so aggressively because their economy is showing much more signs of materially weakening. So it's a little bit, when Trump makes a statement like that, he's operating with more knowledge than the Fed. He knows probably definitely more about the progression of tariffs and what's coming with tariffs than the Federal Reserve does, right? So, and again, I'm just pointing out, like, the Fed is staying cautious because that's their job. Their job is to focus on inflation and on the labor data. And so labor statistics coming in softer now, they're going to say, or one of them coming in soft, one of them coming in strong this week, will be an interesting indicator to what they want to do next. If you get the rest of this week just really soft labor data out of the United States, specifically, let's say you get an NFP report that looks bad, or unemployment claims tomorrow that look bad, the Fed may start to actually say, okay, now we no longer can afford to wait. Maybe we actually need to start cutting rates. That is where the criticism of too late comes in, right? But the Fed has also made the mistake of being too early, right? They have the hardest job in the world, right? Or a very hard job, because as the Federal Reserve, you're constantly trying to predict the future, which is a very difficult thing to do. Even with all the data they have, something can change the whole calculus of it. Like, for example, if you get big sweeping tariffs or a COVID pandemic, like, these things can shock the system and make it very, very difficult to predict what's going to happen next. So I think that the way the Fed is handling it, where they're kind of waiting and seeing right now, I understand why that would be frustrating for the administration, because they want to administer the national debt. But I also understand the risks to inflation could spike back again if you cut rates too soon. So I think that what the Fed is probably waiting for, this is what I would be waiting for. Not that I'm even remotely qualified to be as high up leader of the Fed, but if I was just thrown into that position, I would say we need more clarity. We need more ideas of what tariffs are actually going to look like, because without that information, we're just making a guess on what inflation could do. And if we cut rates too soon and inflation comes right back in, inflation destroys empires of history. It's not you can't mess around with inflation. And so with Powell kind of coming to the close of his leadership, I think he probably wants to avoid ending on a bad note with inflation skyrocketing again. Anyways, NASDAQ's flat on the day. S&P flat on the day as well. Pretty much indices across the board flat. They were up yesterday because we had some good JOLTS job openings data, which was great. We had some solid job openings data that pushed markets higher. And now we are sitting not quite at the all-time highs, but we're not too far away, right? You're talking about 2.6% move to get the NASDAQ and S&P back to those all-time highs. S&P, how far is that one away? That's about 3% away from all-time highs. I'm long the Russell. The Russell has way more room before it can get back to its all-time highs of 17.5% away. I think that catch-up trade could play out this second half of this year. We may have a nice little run on the Russell. That's my opinion. We'll see. But the Russell is a trade that I like when you have kind of a Goldilocks scenario. What is a Goldilocks scenario, you might ask? It's when you have cooling inflation or non-threatening inflation, which I think we're getting pretty close to. We're getting much, much closer to. And you also have solid GDP growth, which doesn't look quite like it's a little skewed right now, because with the imports and exports that we saw, well, specifically the imports that we saw in the United States recently that flooded in to try and get in front of the tariffs that are coming. There was a huge surplus or a massive amount of imports that really skewed the GDP growth data. Some interesting, really great videos out there on that topic if you want to pull that up. Not from me, but from several other people who broke this down that I thought were really interesting. So going forward, I've seen like the Atlanta Fed GDP now. Let me see if I can find that. Atlanta Fed GDP now. GDP now. Let's see. Yeah, so check this out. So the Atlanta Fed GDP now, real GDP estimate for 2025. So you can see they have basically an expectation of strong, economic performance in the back half of this year, which I think is really interesting. We'll see. Obviously, these things change all the time, and it's very, very difficult to predict GDP in the future, as it is with most economic data points. But we'll see. If you get a strong uptick in economic data, the Russell, I think, would look really good. If you had soft inflation and decent economic data for growth, et cetera, that could be really interesting. Let's take a look at gold here now as well. I've been saying recently that my view on gold is limited upside, at least for now, due to this kind of overall pretty good spot in terms of the economy, barring that we don't have some sort of scary inflation stuff. So again, what is the, assuming we don't have some sort of left field, crazy event or big tweet from Trump or something like that, which could happen at any moment. So again, I try to just remove that from my analysis. If that's not in my calculation of where I think things are going, I think we're likely to stay flat on gold. I don't see, we could totally make stabs at moving higher or make stabs at moving lower. But my bias for gold is just kind of range bound and indecisive. I see a bull case, I see a bear case. Both seem about equally strong to me at this time. If something changes, of course, so will my view. If we get something that's really strong for gold, let's say we start to see really poor labor data, and at the same time, Trump says China's not holding up on their deal. Yeah, gold's going to probably erupt through the highs. Though that duo would probably do it, but we don't know that that's coming. And so when it comes to NFP data, I'm pretty much neutral on these. On indices, my default is bullish. On gold, my default is just neutral. I don't really have a strong, decisive opinion of where I think we go next. Oil is another one that I do feel pretty strongly about. Again, we've had some good economic data for the most part. As long as we don't lose the labor data stuff in the back half of this week, oil looks really interesting to me. So I think if you get you can see oil negatively reacting to the ADP numbers here this morning as well. There's that 815 ADP number comes out, oil moving lower, right? Because demand side is really important for oil. If you get really strong ADP numbers, JOLTS job openings obviously moved it higher yesterday. So if we get something on Friday of strength, right, in the labor data, let's say we get unemployment rate stays steady, and let's just say NFP comes in better than expected for the third month in a row where we get a good, if that happens, I think the upside for oil is there. I think that also sentiment on oil, I'm curious to see if we could look at that. Let's see where we're at with oil. I'm going to look at a couple sentiment indicators on oil just really quick. Bear with me. So I want to go, well, actually what I could do first is go to my US oil. Sentiment's a little bit mixed. We're getting a point in put to call ratio, and COT data looks mixed. Okay, so oil. Yeah. So you can see in the latest filing, they sold oil pretty heavily, like institutions, added shorts, decreased longs. But the overall positioning for oil is very bullish. So institutions are very overall bullish on a longer term basis, but recently closed down some positions. So I would say it's a neutral reading there, right? That's the way that's the way our system thinks through this stuff, is it says, what's the overall positioning and what's the latest thing they've done? So if they say, okay, institutions, or if the system sees, okay, the system shows institutions are very long oil overall. However, they recently have been building shorts or reducing longs or things like that, then we get kind of a more mixed view. So when I look at oil, I like this quite a bit if we can get a decisive breakout of this downward structure that we see on the daily chart. This longer term downward trend, this level of resistance here recently. I mean, we may not break this. Like we may get, and it's all going to probably come down to NFP report. So if we get on Friday an NFP report that's just awful, then would not be surprised to see a drift back down to 56. Because right now, the NFP report is really, really key. It's holding up this story that we have. The economy's still kicking it, still doing strong, even though there's tariff worries. You don't want to lose that. And you lose that if NFP starts to seriously decline relative to forecasts. I believe we're expecting 130,000 jobs to be added. If you get like 70, if you get like 60, those numbers would scare the market and we'd look way more likely. The Fed's likely more likely to cut rates, in that case, to protect the labor market from materially weakening, etc. So if we get a strong NFP report, though, that'd be a third in a row. And in that case, you probably look pretty good for upside, in my opinion. So I'm looking for breakouts this week. I've been really watching oil for a couple weeks now. No trades, and I'm glad no trades because we've just been consolidating for the most part on a bigger picture. But I'm curious to see if we get this move this week, which would probably get me into some longs. It's been on the top setups page for a little bit here. Oil's getting a +6 reading. So I like that trade. Neutral for gold. Let's see in terms of, I did get a short position added on euro pound. This one, I also kind of liked this idea posted by Forex James, who I believe I think he's our next streamer on the call. Forex James has this trade. I think he's short euro pound as well. I think he caught it at a better price than I did. But my thought on euro pound is we could take a look at the two economic heat maps, and this is why I shorted this currency pair. So when we're talking economic data, right, we focus a lot on the United States data here, but we can also look at the comparative currencies that we also are trading that are not the US. So like we talked earlier about the European Union having some weak economic data here recently. That's why they're cutting rates pretty aggressively, right? And we can compare that to the UK. Take a look at the UK. UK's just been like hitting it in terms of expectations being exceeded in terms of economic data. Inflation came in high. The producer price index, another inflation read, came in higher than expected. We also have seen manufacturing PMIs come in higher than expected. We've seen services PMIs higher than expected. Retail sales higher than expected. GDP growth higher than expected. So these things are suggesting bullishness for the British pound at this time. So I took this trade, and we can also summarize this. This is a cool, without getting into the nitty gritty components. I really like looking at this chart right here, because what we can see here is that the British pound is beating expectations on average within our system's economic reads compared to Europe, which is missing expectations in recent times. Now, does this mean that the British economy is just a powerhouse, absolute unit with no problems? No. But if you're like a super long-term investor, you care about that. But if you're a trader, we kind of care about the recent stuff that's been going on. And the recent stuff that's been going on in the UK has been better than expected prints, a trend, a collection of better than expected prints in the UK. So that could lead to some short to mid-term and maybe long-term, but at least in my view, it would suggest short to mid-term strength for the British pound versus something like the euro, which has been missing expectations, which would suggest to me like, okay, I'm going to be a little bit more poised to be bearish on the euro. Hopefully that makes sense, but that's why I took that euro pound short position. And And like I said, our next show host, James, will also be discussing, I'm sure, his euro pound idea. He also is short this currency pair. So the way I'm playing this one is also probably similar to him. I've got a dollar cost averaging approach with my FX trades. I'm looking for a move down into possibly like 83.25 on 83.30, let's call it, this level of support here and this level of support here. I think we could see price continue to move lower in that regard. However, if we move higher, that would be an opportunity for me to pick up more of a short position. I have a very small one right now. I just think that the longer term, bigger picture here move is lower for euro pound. So we may go right there. We may make a move higher and then go there. We may make a move here. So I just have a dollar cost averaging approach. So I'll build into this trade if I can. If we go back and test these highs, that would be, an opportunity for me to build a bigger position. And if something completely changes about my thesis here, then I'll just close the trades. Nick, I love the economic surprise meter. It's an awesome addition to the tool. Thanks, Lee. Yeah, I love this thing too. Like it is right there because what it does for me is if I pull up the economic heat maps, if I want to get a more like broken down, why is this thing bullish or bearish? I can do that. But the economic surprise meter, sometimes I don't necessarily want to go deep dive on that stuff. I just want to get a general feel for which currencies are beating, which currencies are missing. And I'll tell you, Lee, we've got something else coming that's a really exciting project. We have so many projects right now, but we have one coming that I'm so excited for on this one because it'll be great for gold traders specifically. We have another one that's coming to add into this list. It'll be a final kind of summary of all of these on average, right? So if you averaged all of their scores, it would give you a general consensus of the global economy. Now, why would that be useful to you? Well, it would be great for gold traders because if the global economy is looking really concerning, that could be a more bullish suggestion for gold. And if the economy is looking really strong globally, might be a little bit more of a bearish sentiment for gold. Does that make sense? So that's coming to the Edge Finder. That's a really exciting product. Someone actually suggested that to us. And that's how most of our products get built is we listen to feedback sent to us by members. And if we hear it enough, if people are like, yes, that's a great idea, then we typically add it to our list of things to build. So it's coming, but that I'm really excited about. Anyways, I shared this trade alert yesterday inside of our VIP group. And just a quick plug here, if you are not already in the VIP, currently you can get access to all of the trades that I am sharing for 45% off for live stream viewers right now. If you'd like to take advantage of those discounts, you get 45% off. We offer a lifetime membership. So you just pay once, you join the group. You can get into the coaching calls, the chat room access. You can see all the trades that I'm taking. I trade FX, I trade indices, commodities. I trade stocks and options. I trade a little bit of everything. And that if that sounds like a fit for you, if that sounds like it would be beneficial, if you'd like to see what I'm doing and why I'm doing it, more importantly, here's how you can get some information. Send us a direct message on our website and our support team standing by can get you information about that sale. Again, it's 45% off to get access to the VIP room. And let me just show you, if I can, what that looks like here so that you can get an idea of what it is we offer. Give me 1 second to just pull this up. So here is what the VIP group looks like. So every trade that I'm taking, I share full context behind why I'm taking it. I put my entries, my stop levels, or my where I'm looking to dollar cost average for my FX trades, right? So all of my analysis behind every trade that I'm taking gets shared inside of the group. If I'm trading gold, you can see I had a stop loss get hit on this trade. And then I had that really crazy one back in April. That was one of my better trades this year, right? So I'm sharing all of it, my goods, my bads. I'm not sugarcoating this as some sort of get rich quick service, but if you'd like to get access to the signals that I'm sending, you can get access right now for 45% off. And like I said, it's the biggest discount that we do all year for VIP memberships. So take advantage, send us a direct message right here. Let us know you're watching the stream and then get you 45% off. That is available for a very limited time, so don't miss it. And yes, Alan is also joining the Signals gang as well. So very exciting to have him joining the call or joining the group. He's primarily a Forex trader. One of the feedback points that we've gotten inside of the group specifically is that I trade a lot of things. We have a lot of Forex traders who are like, can we get more Forex? Chris and I do a lot of like indices and commodities focus. So adding Alan into the mix kind of builds out our roster of traders. So we have sort of a Forex specialist, if you will, which is exciting. Let's take a quick look here. What else is moving this morning? Euro's higher here today. Pound is also moving higher. Dollar yen still struggling to get any movement upwards. Of course, today's ADP numbers not helping the case. There's ADP on a 5-minute chart. You can see it moved lower. Most dollar crosses moving lower on that ADP number. I'm still long CAD Swiss as well. This one's just been a really boring trade, but at least I'm sitting on a positive swap here with this trade. CAD Swiss is a positive carry currency cross to hold on to. So is dollar yen. I've collected some nice swaps holding on to this trade. Of course, I don't base my trading strategy around swaps, but they're nice to collect. If you don't know what I'm referring to, when you hold certain currency pairs long or short, there's positive or negative carry or swaps, right? That's what you'll know on your broker, where they like charge you to hold a position overnight or they credit you to hold a position overnight, depending on the interest rate differential between the two underlying currencies, right? So if Japan offers 0% interest rates, but the US offers 4.5 or whatever, right? 4.25, 4.5. There's that spread, and you actually get paid part of it by your brokerage for holding the position. I believe most brokerages also do take some sort of expense from that equation. Gold here still looks like it's got, in terms of price action wise, gold still looks pretty good here. You came back. It was an ugly test of this area of support, but you can see we kind of held this area. We can actually broaden this, just clean this up a little bit. So we had level support get tagged here, kind of chopped around that level. We'll see if price is going to make a stab moving back up to that 34.20 level. I would not be surprised. What I would be more surprised on with gold would be a significant breakout from these levels, unless you get something dramatic, right? Something big happening. But gold may just, in my view, just chop around for some time while it waits, while it figures it out. And if something scary happens in the world, and if something uncertain happens, so I just don't have a bias. Like, gold is a really boring one for me right now, simply because I don't have directional bias in terms of price action. And then there's just other things that I do have much more bias on, like the indices at this time. Certain currency pairs look good to me. Euro looks pretty weak to me overall. So I'm watching the euro pairs, watching indices, watching oil. How's Bitcoin doing? Bitcoin on the daily chart here briefly broke above this level, came back, now testing, sitting here. I do like Bitcoin to the upside. I think it offers some really good risk reward. We also did, however, get some interesting sentiment shift here with the Bitcoin to gold ratio. Check this out. So interestingly, you have the Bitcoin to gold ratio, which we've talked about, suggests generally a more risk on environment when this thing is trending up, and a more risk off environment when this thing is trending down. And so we've actually recently flipped from risk on to risk off in this indicator. All this is doing is it's saying price of Bitcoin divided by price of gold over time. And it's a cool indicator because it just gives you an idea of, is gold more popular right now or is Bitcoin more popular right now? So we'll see how this plays out. But right now, I think labor data on Friday has a really big hold on everything risk on or risk off related. Because if you get a rock star NFP report, Bitcoin's probably going to move higher with indices. DAX also looks really strong. I'd be really interested in the DAX if you see this kind of move here. DAX looks really good to me as a pickup to add to the team, if you will. Let me just see really quick. If I go top setups, simple, I just want to look at indices. DAX and FTSE. What is going on with Nikkei and China? We're losing score on Nikkei. Looks good technically. Economic data score not looking so hot. I'm guessing this is inflation. Let's go inspect. Inflation here for 3.6, 3.6. Inflation came in line with expectations, so that's neutral. PMI data for the Japanese economy came in better than expected here, better than for services, retail sales, better than expected here. So these three things are positive, these three things are negative. So if I go indices scanner, and we're seeing there was some issues with this. I think our developer already sorted that out, which is awesome. Take a look at the Nikkei. Where are we with the Nikkei? Also, what in the world, the put to call ratio on, whoops, EWJ, I think. Yeah, EWJ. Strong put demand, which is really interesting. Inflation data is really costing here. Yeah, core CPI coming in higher than expected. Okay. Yeah, so just, when it comes to the indices right now, the ones that look the strongest, NASDAQ is a really strong pick for me. Dow Jones is also strong. I'm long the Russell personally right now. UK 100 and the DAX also look good. The DAX is interesting too from a put to call ratio. There's still a lot of concern around the DAX. Like if I go into my put to call ratio stuff, market sentiment, put to call ratio. Okay, if I go Nikkei, do we have this? Like, look at what is going on with this put to call ratio. This is insane. Are people just incredibly bearish? I think what needs to actually happen here is we probably just need to adjust this this threshold. I'm going to write down a note to look at that in just a second. And then also, what's the DAX looking like? Yeah, DAX also has a high put demand as well. Crowd sentiment pretty skeptical of the rally in the DAX, which is interesting. So yeah, some of the global indices also look good. I'd like to add them to the roster if we get pullbacks in the Nikkei. I'm sorry, not the Nikkei, the DAX and the FTSE, I guess, UK 100. This one's sitting right at all-time highs or just shy of it, similar to the US indices. Look at the bounce back that we had. The FTSE dropped by 15%. Actually, that's less than the United States. Rallied back 17% really quick. It's pretty impressive. Big thing I'd watch for on the FTSE would be a breakout through this high. It's an easy, in my opinion, decision of which direction I want to be on, which is the bullish side. I don't know if that's going to follow through or continue, but to me, I might look at taking the risk reward there. Specifically, I would trade, is it EWU? Yeah, EWU, which is an ETF that I can trade in the United States. You see how bullish this thing is right now. It's an ETF that tracks the UK stock market. So yeah, we'll see. Anyways, guys, up next, we have Forex James taking over the show for a little bit. I talked a little bit about my idea on the euro pound, which was also inspired by his that he made a post on Twitter. I don't know, James, if you saw that, but I shouted you out in my video yesterday yeah, cool. Yeah, no, I saw his post and I was like, hey, let me go look at the euro pound. And I ended up getting short as well. So stick around in just a second. And if you're wondering how I got that feedback, I can actually see James in the back studio before he comes on. So it's kind of a little, I didn't tell you guys that I can see that. So if I'm like, oh yeah, I'm talking to somebody and you're like, are you insane? Anyways, up next, we got Forex James taking over the show for a little bit, talking about more market setups. Before we go, just a quick reminder, our VIP sale for 45% off is ending soon. Send us a direct message on our website if you'd like to join the signals room and chat room access. We'll drop the link here to where you can speak directly to our support team. Stay tuned. We'll be right back after thanking a sponsor. We often get asked by our US viewers, how do you guys trade gold and indices on a regulated broker? To trade gold, indices, and more, we trade using Webull. And for US citizens watching now, for a limited time, you can get free stocks if you use our promo link that can be found in the description or dropped in the live chat right now. Webull is our top pick and personal choice when selecting a broker here in the United States for stocks, indices, and commodity trading specifically. Get your free stocks now by clicking the link and signing up using the instructions found there. Now, back to the show.
Hello. How's everyone doing? Happy Wednesday. Okay, so yeah, Euro Pound, as Nick said. Yeah, I've been looking at Euro Pound. It seems like a really, really solid trade, actually. Now, the problem is, or maybe not necessarily the problem, I'm a little bit late to the party on Euro Pound. We've had already pretty much a full correction of this upside spike. We saw it was almost a 5% gain, which, yeah, has been corrected very, very quickly, but that's very typical of Euro Pound. But as I always say, the behavior of this market is very predictable, really. So we have these spikes, but when we have the correction, very normally we will see the market trend lower than this initial, than the initial price. Obviously pre-spike. So it makes sense to go short on Euro Pound looking for lower prices. My first take profit level is wrong one, rectangle. First level for a take profit in my view is sort of down here towards the 0.82472 level. Now it's just a case really of waiting for, in my view. I'm not in a position yet. I was yesterday looking at this level here because it was almost a fib level. It was a little bit forced, which is why I didn't take it too seriously. But there was this sort of fib level here. The reason that this wasn't a super strong confluence for me, I love fibs, but this is, as I said, it was forced. So the reason is because I'm using this high here, but that's ignoring this high. It's ignoring this high. It's ignoring these highs. And it's sort of just cherry picking what fits. So it wasn't enough, if that makes sense. As for the data behind it, the euro is struggling. Regardless of what you think about the markets right now, the data is the data. It's not looking good. Euro or European inflation ticked down, I think it was yesterday, which obviously is reinforcing that rate cut in June narrative and throughout 2025. The UK is holding strong. The Bank of England is currently holding rates, waiting for, which inflation was it? Just sticky inflation. I can't remember exactly what the exact detail was there. So yeah, Bank of England's holding. European Central Bank is expected to cut. It's pretty much priced in now, to be honest, or is already priced in. But the approach to this would be pretty much the same as what Nick said. It wouldn't be a case of going in for a typical trade like this, where you've got the stop loss and take profit down here. That could work, but for this market, as I said, it can be quite choppy, quite noisy. I think that would be a little bit too risky. So I'd quite happily go short if we can come back into this resistance. Short again here, then a final short here, and then again with a take profit all the way down at this next sort of support level. It makes the most sense to me. I don't really see much of another approach there. But yeah, that's pretty much it. It's very smooth, very simple. Royal, yeah, this is the target. So I'd first target the 0.825. ADP wasn't good. ADP is ADP. I don't really care about ADP too much. I think someone else said it earlier in the chat. I can't remember who it was, but it's a bit of a flimsy data point, to be honest. It's not very accurate. It doesn't have much of a prediction for NFP, and it's generally just doesn't mean that much. The dollar overall is really struggling at the moment. I'm currently watching this level just to see, are we going to break below? Are we going to hold? We're very precarious. We've failed to break lower so far. We are seeing bulls fighting their ground, but the case for upside is very limited. I don't think we're really going to see any upside or any significant upside in the dollar until we see more resolution in tariffs. The data for the US actually isn't terrible. It's not necessarily good, but it's definitely not bad. So ADP on here hasn't actually updated yet. No, it hasn't. Yeah, no, it's fine anyway. USD impact 46%. So it's more on the bullish side from a data point of view, but the geopolitical landscape is having a pretty serious impact on euro dollar right now. But I don't really care too much about that yet. Anyway, I could be eating those words soon, but it's fine. Just above average on euro dollar in terms of the average price. So I'm not really too concerned at the moment. Giovanni, thank you very much. Handsome specimen. That's an interesting one. I don't think I've ever been called a handsome specimen in my life. I'll take it though. ADP data comes from a company named Automatic Data Processing Inc. ADP, which is not the best. Yes, that's correct. We do have more news coming though, don't we? Let me just double check what we've got today. Yes, we've got S&P Global Composite PMI, ISM Services Employment Index, ISM Services New Orders Index, ISM Services PMI, ISM Services Prices Paid. That's all in, give or take, about half an hour. So we might have a little bit more fun ahead of us today. You saw me calling Alan handsome. Yeah, Alan is a handsome guy. I like Alan. He's a nice guy. Good person. And a good trader. Okay, right. Let's have a look at some markets. I've not checked Edgefinder's readings today. Let's see if there's anything interesting. Still risk on with the Nasdaq, the Dow, the S&P, and the Russell. The pound is obviously getting a very good reading. Pound Aussie is actually another one that I wanted to take a look at. I've been talking about Pound Aussie for a while, but I just haven't managed to really find anything. It's one of those markets that's just very tricky to pin down an entry because it's very choppy. It can have really nice runs. It's very similar to is it Aussie New Zealand? I normally compare it to something. I think it's Aussie New Zealand. I can't remember my own comparison. But you can generally see pretty nice runs, but those runs consist of a lot of chop. So you've really got to have sort of an entry and then a relatively wide stop, and then just be able to sit and do nothing for a while, which isn't really my style. I like to be a bit more sort of in and out if possible. Either way, the data's pointing up, the trend is pointing up. The price action is not terrible right now. There is still something we could do here. So in my view, this is the most simple approach. So stop loss below this 200 moving average, below the recent lows, sort of actually more towards here, I guess, just at these lows here. Take profit at the highs, and I think that could be the play. Actually, let me just take a quick look at the Aussie dollar. So my summary says The Australian dollar faces a mildly negative short-term fundamental outlook, while the RBA retains optionally to hike. Weak domestic data, slowing inflation momentum, and fragile external environment point to a constrained monetary policy path. Add this to soft Chinese data and moderating terms of trade, and the balance risks for AUD over the next 1 to 4 weeks tilts bearish. Okay. So it does make sense from sort of a geopolitical side and central bank side as well. Oh, Alan's in the chat. Oh no, that's like when you hand a note in class and it gets into the wrong hands. I've been caught out. Glenn, change your profile picture so you can too get a stream compliment. Are you looking to go long on pound dollar? Not necessarily. James 10 pips. EU lost yesterday has been wiped. It's all good. Ball out. Doesn't bother me. I would actually, yes, because it would offset my risk on euro dollar. I quite like the pound on a fundamental view. The US dollar is on the rocks, to be quite honest with you. I put out some research actually this morning for my Discord, and it's just we went into pretty much everything from base case, best case, and worst case. It just doesn't look good. I mean, it's not detrimental. The dollar's not on the verge of collapse in my view, but it's definitely not in a great spot. It's like it's injured, but it's not dead. So yeah, that puts me in a position where if we do see the dollar start to break this support and we see sellers stepping back in and really starting to push down, we see a continued rate hold narrative by the Bank of England, it could be a pretty strong play in my view. And again, it would just offset some of that dollar risk I've got. Yeah, GU long's pretty good. Why did JPY react positively to ADP? Habib, you've got to think about capital flows, my friend. So if you are an investor, let's say this is you. So you're looking at the dollar here. You're saying, I'm a little bit uncertain about the dollar. We just had bad ADP. I'm going to cash out of the dollar. Where would you want to go if you're concerned? Well, you would want to go to risk assets or risk off assets such as yen, gold, Swiss. And that's very sort of typical. When you see bad news for a risk on currency, you can see flows into risk off and vice versa. So it doesn't mean the news directly impacted the yen, but it just swayed investors to allocate capital elsewhere. How is gold looking? It's a good question. I've not paid any attention to gold recently. Doesn't really look like anything from my view here. It's just in a range, to be quite honest with you. There's no real direction. You know, we were trending to the downside, but that seems to have paused. We're creating a pretty nice uptrend here in the short term. But overall, this market's actually not really moving anywhere. So in my view, there's no catalysts for gold to go higher. We've had no real or no impactful developments on trade or in the sort of what do you want to call it, like the war factors with Russia, Ukraine, Middle East, etc. There's no developments there, so there isn't really anything that's making gold go, oh god, let's go higher, we need a safe haven. But there's also still uncertainties in the market which are preventing gold from going lower. So in my view right now, gold is flat. I think we saw profit taking. So you may have remembered, or you may remember me saying that I'm not really bullish on gold because there wasn't anything going on. Everything seems priced in. So I think we did have that profit taking move here, although I expected it to go slightly lower, granted, but you know, you can't always get it right. So we had that profit taking move, and now I guess we're still seeing the inflows in gold from those fearful investors. Ball out, why do you think it's going to break? You seem very adamant on bearish dollar. I'm not necessarily against you. I'm just curious why you're so so determined on that. Dollar yen. Dollar yen's another one that I missed. Really frustrated about that actually, because it was essentially a perfect setup in my book. It was, bearish dollar, yen's holding ground, BOJ on the path to normalization, bearish dollar yen makes a lot of sense. We pulled back into this 50% fib level pretty much perfectly, created a double top, maintained below the 200 moving average. It was a good entry, but unfortunately just missed it. It remains valid though. If we can come back up into this 50%, I may reevaluate and look to go short again, or to get short. But yeah, I think dollar yen makes a lot of sense to continue lower. Mohammed, candles, to be honest, in this environment are very meaningless. I've been saying it for a while, but the markets at the moment aren't really driven by the same things we typically see. So, normally you would say, oh, we've had a bullish candle on a monthly, bearish candle on a monthly, fundamentals are saying this, blah, blah, blah. At the moment, the markets are primarily risk-driven from tariffs and trade wars. It's not really, and this is why I've been very slow on actually taking trades. You might have seen I've not been in a swing trade for almost a month. It's because there's too much whipsaw and there's too much uncertainty for me. So I actually wouldn't put really any weight on a monthly candle on gold. Just yet, anyway. Elliott concept were based on my years of backtesting. I've changed it a bit, how I view the markets, because Elliott is outdated. Yeah, Elliott waves are a little bit meh. Yeah, I wouldn't. I think if you are going to trade waves, I think you would have to do what Bollar's done and come up with basically a modernized version of it, because Elliott waves have been around for donkey's years, which you could say is a good thing, but yeah, no. Dynamics have changed since Elliott waves were created. Actually, I'm not sure how long Elliott waves have been around, but I know it's been a long, long time. I'm in US 30. Forgot to say that. I took a long position yesterday. It's pretty much a no risk trade. I was looking for, I've got to take profit at 45,000, all the way up here, basically back to all-time highs with a pretty large stop, but the risk reward is fine. It's a 1 to 3.7, so I'm quite happy with this. It will trail stops and sort of just let it run. What's a modernized way? I don't know, OT. I don't use them. I don't really like waves. I guess I look at waves the same way Ballout looks at sort of support and resistance. I just don't see how they can really have any impact. But that might be me being naive. I don't mean any offense by that. I'm just saying it's just not for me. Silver, okay. Yes, so I was looking at silver at the start of the week and it piqued my interest. So the idea is very similar to what I normally look for, or exactly what I normally look for. We've got the structure here, or the resistance. We've broken above. I'd be looking for the retest here to go long and then let it ride. I'd still expect silver to come up towards sort of 38 to 40 at some point. So take profit at 40. Stop loss would need to be a little bit wider than that, I think. So probably around here. We'd be just below these lows, just below 200 moving average as well. And that would be the setup. But yeah, I really like silver to the upside. And again, it would be a pretty nice trade to just hedge off some dollar risk that I've got. Lee, you're looking at Dow as well. Very nice. Okay, let me have a look at silver's fundamentals. I don't really pay attention to silver that much. Okay, so summary. Silver holds a neutral to modestly bullish macro bias over the next 1 to 4 weeks, while capped in the short term by high real rates and firm US dollar. That's not quite the case at the moment. The metal is supported by strong structural industrial demand, especially solar, supply constraints, and its sole its role as a leveraged hedge against economic and geopolitical uncertainty, aka risk off. The balance of risks is skewed towards accumulation on dips, especially if the global macro data softens or Fed rhetoric turns dovish. However, without a clear growth impulse or rate cut catalyst, silver is likely to grind higher gradually rather than a surge impulsively. So there you go. So it sounds fundamentally and technically bullish. So I would stay on this idea of entering long on a retest, or even actually if we just see some sort of pullback, even if it's not a clean break and retest, I actually might just start buying silver on the next dip, as said on the analysis. James, regardless of politics, what do you think about tariffs? Do you think it's going to stimulate economy long term or lead us lagging behind? I don't know. I'll be honest. I have absolutely no idea. I can see both sides. Actually, I can understand why people would say that it's not good, but I can also understand why it in theory could be a great thing, but that's only if it works out as Trump is expecting it to work out. But yeah, I'm going to be honest with you. Really have no idea. How do you calculate your risk in terms of percentage, e.g. 2% of your capital? Oh, sorry, do you? Yeah, I thought you were asking how to find a percentage. I was like, we need to go to maths class real quick. But yeah, I allocate 5% capital to a DCA trade. So when I'm in a sequence, actually, let me just show you this. So let's say I was going long here. Let's say I was fading this move, hypothetically. I would have, for this whole move, so I was shorting this, I would not allow myself to go over 5% risk. 5% might sound a lot to some people, but for me, 5% is completely fine. I'm happy to take that risk. When I'm in a swing trade, though, like this, it can range between 1% and 3%. It depends on the trade itself, how confident I am in the trade, how strong the fundamentals are, how clean the technical setup is. But yeah, that's that. James, because that's what structure and my finance methodology shows. It also lines up with my weekly extensions. Fair enough, Bola. Okay, right. So how long have we got until news? Well, we've got 7 minutes, or just over 7 minutes until the S&P Global Composite PMI. Is martingale risk management same as DCA? You can't really manage risk with martingale, I'll be honest. Martingale is... So the thing is with martingale, I did a lot of experimenting with martingale at the same time I was developing DCA, and the results can be exceptional. So you can have an equity curve that in theory looks a bit like this. I mean, actually, sorry, may look a bit like this. Oh no, where's my drawing gone? Anyway, so you'll have huge drawdowns, but the returns on realized gains are massive. However, you have literally, statistically, a 100% chance of blow up. Martingale cannot work forever. So if you wanted to do martingale, there's a lot of EAs and stuff actually that do well on martingale, but obviously, again, eventually blow up. So what in theory you could do is put like $500 in an account, let it just martingale up, and then take it out when you're satisfied with the profits. Obviously, you know, likely you're going to lose it all eventually. However, DCA is a little bit different because you're not doubling down. You're just increasing position size and bringing up average price, or bringing down average price. So DCA is much easier to manage the risk. So rather than being, you know, let's say 1 lot, 2 lots, 4 lots, 8 lots here, then on this drop here, your account might blow up. Whereas DCA, you're like, okay, it might be like a 0.03 or 0.05, you know, whatever it may be. And exactly the same position size here, exactly the same position size here. So then at this point, your average price is here. And at this point, you're in a little bit of drawdown, might be like 1-2% risk. That's obviously not exactly it, but you should get the idea from that. But yeah, martingale, I would never say is a good idea, unless you are trying to quite literally gamble and flip some money quickly. Trump said he'd end Russia-Ukraine war in 24 hours. Yeah, that's not worked out, has it? Look how that's look how that's working out. Similarly, with tariff situation, he'll screw up the economy and then blame Biden. Yeah, I don't know. I'm in two opinions at the moment with Trump, and this isn't from a political standpoint. This is just from what I've observed. So he clearly knows what he's doing. Well, actually, I probably shouldn't say that. The example, what I'm trying to say is when he essentially tanked the stock market. So let's go over to the S&P. Here, he tweeted it was like around here. I can't remember the exact time, but it was pretty low. It was like in this area, I think. He tweeted out to buy DJT, which is obviously his stock. And then he also tweeted again, I think it was around here, that it's a great time to buy stocks or something along those lines. So it's like, it's clearly planned. Obviously, I'm not saying he's done everything impulsively, but to what extent is he aware of what he's actually doing? And to what extent is this all just an ego play, is what I'm trying to say. I don't know. I'm not really great at politics. I'm not in that side of the world. I'm pretty lost when it comes to all that stuff, unless it's about the UK. I know the UK politics, but that's because it affects my life. I pay a lot of attention to that. You know what, Bull? That's funny. When I was away for that stag do, I went to a roulette table. I was using martingale. I managed to turn 20 euros into 140, something like that. Worked out really well, but it got to a point where I was like, this is a little bit too easy. So I'm going to have to walk away because I'm going to lose all of it very soon. What do you think about JPY? JPY seems to be doing very well. I wouldn't like to counter trade them. I think pound yen is probably the only yen pair I would like to go long against, and that would also only be if I was short on a different yen pair, just to again hedge some of that risk and bank on some of that pound strength. But yeah, the yen doesn't seem to be problematic at the moment. I'm seeing it as quite simple. Oops. Yeah, it seems pretty straightforward right now. It's just sideways, really. Nothing's going on. So I think it seems to be waiting really for something to happen, whether it be, a resolution of tariffs, it'll drop off, whether it be a escalation, then it'll rise. But at the moment, it's flat. So there's very little to do, in my opinion. However, I still remain on the yen bull long-term idea. Yeah, I don't really like gambling. I'm not an advocate for gambling, but if I'm away and there's a roulette table, I'll hop on for an hour and see what I can do. Generally, I actually have quite a good win rate at roulette, but that's only because I double down after losses and then walk away after a couple of wins. I don't stay long enough to lose all my wins. I'll make enough to like pay for a meal or to pay for some drinks, and that's it, and then I'm done. I don't go to a roulette table aiming to make a lot of money. US Trade Representative Greer negotiations with the EU are advancing quickly. Yeah, I've heard that headline a couple of times and nothing's really happened. Did Trump do that, Lee? I'm not going to say downstream. I don't know if that would be a problematic thing for me to say, but yeah. Am I lucky enough for $500 as a giveaway from you? You're handsome, though. Just try my luck. No. Your luck is pretty poor today, my friend. If I had $500 just to give out to people, that would be going into my investments. I'm just a poor trader. I don't have money like that. Play second on blackjack. Nice. I've never played blackjack. I really like Texas Hold'em, though. I'm really good at Texas Hold'em. That's crazy. I've heard stories about what Trump's done in the past. I'm not trying to make this political, by the way. That's not my goal here. I'm just saying that I've heard very questionable stories, which I can't verify or not, but Yeah, crazy. Thoughts on pound Swiss? I like the long idea on pound Swiss. The only thing that's deterring me is just the uncertainty in the markets that's going to keep the Swiss bolstered. So you can see it's like the yen, it's just not really doing anything. However, all it takes is one thing. I mean, it could work out really, really well if we do get a resolution on tariffs. But if we get any sort of escalation and we do see a fear back in the markets or increase in the markets, Swiss is going to lift off along with the yen, which is just this trade's doomed at that point. So that makes it, in my view, almost a 50-50 coin flip. There isn't really much of a macro or much of an economic standpoint I can take, because even if I have a really good idea, long or short, both ideas can be wiped out very, very quickly. However, from a technical view, looks bullish. Let's have a look at some data. Pound Swiss is actually bullish as well in the Edge Finder. So if you're wanting to just take a trade and you don't really care about the geopolitical whipsawing, then I would say long positions make more sense. Really bad seasonality actually on pound Swiss here. Retail's majority short, which is quite nice. Weirdly enough, actually, retail's positioned quite well for current market dynamics. COT is bullish as well. So yeah, I would lean more towards a long, but for me, there's just too much uncertainty to take a trade like that. Traders are good gamblers. I was speaking to ChatGPT. I'll be honest, I was very, very drunk. And I came away from the roulette table and I was like, oh my God, am I a prodigy? So I was talking to ChatGPT. I was like, is it possible for someone to actually be a professional roulette player? Because it was just too easy. I lost, I put double down, made it all back and a bit more. And I came away with like, what, 300-400% my capital. I was like, wow. Anyway, the only way really to beat roulette is through statistics or maths. So I don't mean statistics and like trading stats. It's more like there was a guy or a couple of guys once that had a camera over the top of a roulette table that would calculate the speed and the starting point, and then they had a computer that would tell them the probability of it stopping on what number. So they'd bet on those like handful of numbers. But other than that, it's pretty much impossible. You can't have an edge on roulette. But you can see patterns as a trader, which is what I found out. So, if you have a certain combination of colors, maybe you could come up with an idea of statistically, maybe black's going to come up now or red. But even that, it's fake stats, or what's it called? Hypothetical probabilities or whatever it is, where you could have 10 blacks in a row and you might think that red's going to come now, but there is actually no reason for red to come up after 10 blacks. That's just what you want to think it will happen. Anyway, sorry, I'm going off on a tangent here. This is not really what you guys turned up for. My bad. A lot of the prop traders in Chicago come from professional poker and gaming backgrounds. Yeah, I think poker you can definitely obviously have edges and things in poker, but roulette it's a game for the dumb, really. I think, again, you could probably make some pretty good money if you are someone who can go in, make some money and leave, and not someone who's going to sit there constantly trying to triple and double their winnings and gets a bit too into it. Always bet on red? No, I don't. I just counter. I basically DCA on roulette. So if black's showing up, I'll start betting red. And it works out well. Gambler's fallacy, that's the one. Yeah, that's it. That's what I was trying to say. No, Paul, you focus on the money. I didn't mean the money. It's more just, it was easy to win. Like I said, I don't go to casinos to try and make crazy money. I'm not a gambler at heart. I'm quite risk averse. But if it's there, I'll go and try and get a meal paid for. I'll have some fun with $20, €20, see what happens. Anyway, like I said, we're getting off track here. Professional degenerate, yeah. Do you think being a pro trader is easier than being a pro poker player? No. I don't think so. Well, I don't know. I'm not a pro poker player, so I can't really tell you. Oh, wait. Yeah, news. How long have we got? Oh, it's already come out. Sorry, guys. My bad. I got caught up in our beautiful conversation about gambling. S&P Global Composite PMI came out at 53, overshot expectations or forecast, which is very muy bien. Dollar should be slightly up after that. Let's see. Have we had any? Yeah, a little bit of upside. That's all right. Not bad. But that's not it. We've got more news coming in 10 minutes, so we'll have a sit and listen to that or watch. Wow. That almost looks like that says Bashi, but it can't be Bashi because I've not seen Bashi in a long time. He's not been in my streams for a while either, so it can't be him. Okay, right. I'll go over news after we've had the rest of it, and then we can have a proper look at it. Let me just check the time. I'm actually on. Yes, so I'm on till 10:15. Then it's Chris. Sweet, normal schedule then. Oh, it is Bashi. You said sorry. That's fine then. Okay, no worries. Mehdi, hello. Okay, right. What do we have on here? What else do we? Oh, Euro pounds here. As we were saying at the start of the stream, Euro pounds definitely on the watch list. Aussie New Zealand, I like it, but I feel like I've missed the train, which is a bit unfortunate. So I actually might start fading Aussie New Zealand. So that means basically just buying it, just counter trading it. So we're currently in, actually, if we just draw the range here, I think Chris Pulver actually is in longs, always discussing longs. We're roughly, actually, let me do, how do I get the middle line here, white here. Yeah, so we're almost 50% of the range. Obviously, it depends where you draw the range, but whatever. So we could, or I could, start looking to buy essentially after and below this 50% range. So buy here, buy maybe another 20% down here or 25% down, then buy the bottom and look to just catch the bottom of this range. Because it is essentially just a sideways market. There's no reason. I just realized that's the weekly. So actually maybe a little bit closer entry, something like that. I feel that was the weekly time frame. Yes, I like it. That might be my plan actually, is just to fade that. Oh, wait. I'm not going to yet, but I think I'll keep that in the back of the head for a while. Excuse me. Sorry, I'm just catching up with the chat. Hold on. Okay. So yeah, Euro pound, Aussie New Zealand, maybe for a counter trade or counter trend trade. Oil's reading bullish. I've not checked oil in a while. I don't really trade oil these days. I've kind of just put it on the bench really. Let's see. I think oil could, from a technical view, could be quite a nice long position actually if we can break above these highs. So we've got one here. So I guess actually we'd just leave that one there. Yeah, so if we can break, retest, continue, break, retest, continue, then we might head all the way back up here to fill this gap. I actually might set this on the watch list, although I don't really trade oil. If Edgefinder's bullish, it kind of gives me a reason to just take a small position and see what happens. Bashi, I'm in US 30 long, and yeah, this position here, and I'm in euro dollar shorts as always. Yeah, we'll see. I'm experimenting on demo with the euro pound trade. What do you mean you're experimenting? What, like a new strategy or just the trade itself? Cheers, Bashi. Yeah, we'll see. We'll see. Euro dollar might be doomed. This might be the first DCA trade where I actually just call it quits and take the loss because it's rough. I'm still alive. Like the drawdown's not really anything significant, but it's just tricky. I'm just constantly watching it and it's just getting a bit boring. So I might have to cut it and just wait for a while. Oh, DCA strategy. Okay. Yeah, I wouldn't do DCA on every Forex pair. I would only really do it on Euro dollar because I love Euro dollar. Aussie, New Zealand, Euro pound. That's pretty much it, actually. Unless there was some real serious thing like Swiss yen, where I've got a really, really good idea, but it's long term. So I'm executing, a short here and there when we reach daily and weekly levels. Jamie Dimon reckons the bond market will break soon. Take it with a pinch of salt. Weren't they the same guys that were saying the stock market's doomed not too long ago? I'm not sure if it was actually them, but yeah, I don't know. I wouldn't. When it comes to day-to-day analysis, a lot of institutions put out great information. When it comes to stuff like recessions and serious things like bond markets crashing and crumbling and stuff, it's not really that relevant until it actually happens. That's just my view anyway. I'd say it's maybe like a 50-50 chance that they're right or wrong. Range bound markets are better for DCA, yes. Trending markets can be great, but the way I do it, I quite often like to counter or fade moves rather than go with the trend, which obviously can be very dangerous if done wrong or done with too much leverage, but that's where your skill and management comes in. Jamie's your bud. All right, Alan, you don't need to flex on us, buddy. I know you're the one with the Series 65 license and all that, but I'm on IG. Yes, it's just elitetraders.io on Instagram. Although my Instagram's getting a bit negative. I've noticed actually over the past week or two, all my posts have just been ripping into people. So I think I need to chill out a little bit, put out some more value. Although it does do pretty good views. So, which trap do I fall into? You met the guy once. Very nice. I do like him. He seems like a family man. I watched some interviews with him, and he seems to prioritize his time with family, which I think is, especially in a person of his position, I think is honorable. But I'll be honest, I'm not sure I could deal with the pressure. He banks like every country or a lot of countries. I'm not sure exactly which ones. A lot of companies as well. I couldn't deal with the pressure. I was like, let me just chill. Anyway, US 10-year. Currently not a huge concern for me right now, but if we start breaking below here, then yes, I'm going to be in a little bit of trouble, which will mean that I'm going to have to manage or likely just close out positions. So far, 200 still holding, support still holding. So from a technical view, there's still a safety net here. Yeah, we've got news in just around a minute. So let's see how that goes. Hold on, I just need to quickly read something before we go on. Okay. Okay, so let's see. got in store? So we've got news in about 30 seconds. Alan, get me a water. Yeah, could you imagine being in a position of power like Jamie Dimon? I really don't think I'd enjoy that at all, to be honest. I quite like to be just doing my own thing. Kwang, hello, good to see you. So services comes out as not great, 49.9, contraction a little bit here. Yeah, not the best news there. Pretty poor, actually. The only real supportive thing today for the US dollar was the global composite PMIs. Everything else has been, yeah, not good, actually, whatsoever. It's not the worst thing. It's still, 49.9, hanging around 50, but yeah, under 50 is not viewed as a good sign. So, yeah. Although the dollar doesn't seem to have actually moved at all off that. Is that just my trading view? Is it delayed? Yeah, delayed data by 10 minutes. Okay, let me go to DXY, actually. I don't know why I'm on DX1. Yeah, there we go. Dollar down. To be expected on poor services. So uneventful. Well, actually not uneventful, but nothing overly drastic just yet. We're still sort of in this range. So global composite supported slightly, then services PMI, obviously not great. So we've seen a little bit of a decline. And this decline likely will continue, to be honest with you. Just another nail in the coffin for the dollar as we go along, to be honest with you. Data overall is okay, but yeah, with all the uncertainty around the dollar and pessimism, we've got stagflation risk, recession risk. Now services are down. Yeah, it's looking bleak. The 22-day drawdown continues. Aaron, you've been in drawdown for 22 days. That's rough. Imagine if a dollar was a person. I want to see that YouTube video. I'll remember the good old days. What? Imagine if dollar was a person. I want to see that YouTube video. Lol, remember those old. Google was a guy. I think I do. Is that the one where he was like sat in the office? I think I know what you mean. Yeah. You confused me there. I had no idea what you were talking about. Okay, so let's see. Gold pretty muted today. Actually, it's pretty much done nothing, sideways. So yeah, gold's proving tricky to move. About to pass second phase of my funded account. Very nice. Congratulations. Just need gold to push up a bit more. Yeah, likely will do on the back of this, of today's news. Can you look at UK 100 and DAX? Yep. Very impressive recovery, mainly by the DAX. UK 100's done pretty well as well, though. So let me just see. The FTSE seems to have fallen off a little bit on the edge finder. It's still reading bullish, but it's only a 6. Excuse me. DAX is a 7, and to be honest, I think the DAX is more appealing. The FTSE, I hate to say it, but it's likely to stay range bound here. And that's not really from a fundamental view. I just mean that from the typical price action we see on the FTSE. It doesn't really do that much. It does have a slow drift to the upside, but it's very minor. Typically, it is just sideways. So if we do manage to break up and start creating new all-time highs and the FTSE goes on another rally, very impressive, but I'd be quite surprised by that. The DAX, however, I think has a lot more potential. So actually we did get this retest here, which would have been a nice entry. I would be buying the DAX on dips. So I think if we can see another dip down into sort of this 200 into support, I'd be quite happy to buy there and then let it run higher. I think the DAX has got a lot more potential than the FTSE. Quang, I appreciate it. No, there's no positions on dollar yen for me just yet. I would like to go short dollar yen, but I missed my entry yesterday, which was unfortunate. Yeah, dollar's taking a beating here off today's news. DXY looking more likely to 96. Yeah, maybe. I mean, it's a while away, but yeah, possibly. Any ideas for New Zealand yen? Not at the moment, anyway. Let me have a look. To be honest, short, I think. I'm not really 100% sure on the New Zealand dollar at the moment. Let me just have a quick look. Oh, wait, hold on. New Zealand dollar holds a neutral to slightly bullish macro bias over the 1 to 4 week horizon. The RBNZ's firm policy stance contrasts with the easing bias of other central banks, offering short-term relative rate support. However, this is counterbalanced by weak domestic growth, softening labor trends, and dependence on external demand, particularly from China. While hawkish rhetoric may sustain the New Zealand dollar near term, a fragile macro base means any negative growth or trade shock could quickly reverse sentiment. Okay, so it seems like it's a bit ropey or a bit rocky at the moment. However, long position would make sense, but again, the yen is a safe haven, so it would be ultimately down to how geopolitical developments are going to continue to go. So I would be looking for a very simple bounce off this 200, but again, you would be at risk quite heavily of the yen spiking on any risk off news. Personally, a bit worried about the DAX with EU being resilient trade negotiations with the US. I think the DAX is fine, to be honest with you. The DAX is a bit of a superpower at the moment. What do you think about Swiss yen, about long in short term? I suppose you could trade the range here. So you could be looking to essentially just buy on dips and let it come back into this resistance, take profits here. That's the only real thing I see, to be honest with you. The price action is choppy. Like I said, it's moving to the upside overall, but there is very little here in terms of structure to trade from. Yes, it's a bit ugly, to be honest with you, but short-term upside. Yeah, fundamentally, actually, I don't really have anything for short-term on Swiss yen. Suppose tariff deals announced today could bounce the dollar back. Is the tariff deals today, Alan? Ball out. That's the thing, though. It doesn't matter if Alan believes it or if I believe it, because as long as the market takes it, that's all that matters. I'm not interested in, if the news is good or bad, or if it's fake or whatever. If the markets are going to move from it, I'll listen to it. As Alan just said. Wow, yeah, real hit here on the dollar. We're down just off services, almost a quarter. Well, actually, yeah, just over 1/4%. When we're reading countries' economic outlooks, it's from the Elite Traders website. So this is, you go global research. This is 100% free. Go on to the most recent one. I do this every week. I publish this for everyone and anyone, but you can't get to it directly on the Elite Traders website. So you can only really get it if you follow me on Twitter or if you're in the free Telegram. It's very hard to see when tariff negotiations will be, when the White House has to send letters to countries reminding them that there are tariff deadlines. Been saying DXY to 96 forever. Well, that's the thing. I could say euro dollar to parity forever, and eventually I'll be right. Exclusive. The US is refusing to provide air defenses back to the reassurance force. Hold on. Close my notification. And the UK and France are planning in post-war Ukraine. Whatever. That's the thing. It's all about when. Okay, so I've got about 5 minutes left on this stream, and then you have Chris Porber coming to take over. So if you've got any last questions for me, let me know. If not, I can keep rambling here. Yeah, I'm a little bit salty about this dollar yen trade I missed. New Zealand dollar up, pound dollar up, euro pound actually might be coming into an entry point here. Okay, so I think if we can come back into this high here, this will be short entry. Oops, short entry one. I just need to make that yellow or orange. Orange. Beyond there, where else would I want to get in? I suppose the only real place would be sort of here. So I guess that's the plan. So we'll see if we can get that. What do you do after joining Telegram? You don't have to do anything. I just send stuff in there. I send analysis, market updates. I sometimes send mini PDF courses and stuff, but that's about it. See you later, Bash. You have a good one. What analogy? Running 10% on dollar yen shorts. Nice one, Kobe. 10% is a really, really nice gain to have. Yeah, there we go. Now gold's starting to trickle upwards. Yeah, Andre, we're going to see dollar crosses stronger today after services came out. It came out quite poor at 49.9, which missed previous and missed expectations. Telegram is Elite Traders IO, one word. You can get access to the Telegram on the website though, so on the Elite Traders website. So don't worry about trying to find it on Telegram. So yeah, I think gold, either I'd be looking to buy on a pullback, and this would really just be trying to follow the trend and again offset some of the dollar risk, or I'd be buying on a retest here and looking for long positions. It's kind of the only two entry points I can see here on gold. Okay. Let's just see what retail are doing at the moment. So mine, get rid of metals, indices, commodities. So still very short dollar Swiss. Sorry, no, they're very long dollar Swiss. So we want to go short dollar Swiss. Aussie, New Zealand, they're very long as well. They're positioned completely wrong for these two trades. Euro pound, they are majority long as well. So that's a nice little confluence for Euro pound shorts. Swiss yen, 75% short. I wonder why. Do you think they're shorting just because Swiss yen's high or expensive? Nothing else here that really surprises me that much, actually. Okay. What's the moving average? This is a 200 exponential. Yeah, 200 in my view is sort of the most relevant one. So if you put it on the weekly, daily, and monthly, you'll see a lot of the time markets will respect the 200 because it's so commonly and so widely used. It's like a self-fulfilling prophecy. So like here, it sort of bounces off, not perfectly, almost perfectly, consolidates, bounce down here. Remember, this is a weekly time frame, so it's quite significant. Bounces here as well. So it's a good little, where have my candles gone? There we go. Don't know what happened there. It's a good little indicator just to get an idea of not just the trend, but also places where price could potentially bounce. Martin Shkreli. Yeah, he's a crazy guy. Yeah, so there's nothing apart from dollar yen and euro pound. I think that's pretty much it in terms of my watch list. US 30 as well seems to be running okay, so I think I might scale into this actually. I took it quite low risk. So if I can see price break above this high, then I might add into another position and start trying to maximize profits on this one and trail stop. So if we break, retest, continue, trail this stop to break even, re-enter and add in or scale in on the retest, and then let it run. I think that'd be a pretty slick play. Obviously, that's not a perfect world though. Need ball out on stream. That would be entertaining. Put a face to the name. Yeah, it seems like we've run out of a little bit of steam here now on the dollar from ISM. So we'll see if we can have the typical correction we have off news, or if we are going to see the dollar now I can't talk. We're going to see the dollar continue to break down, is what I'm trying to say. God, I'm ready for the weekend. It's only Wednesday. Got my 24-hour stream tomorrow as well. That's going to be interesting. Following Alan's footsteps. Got to get a job at JP Morgan. Philip, this is the setup on dollar yen. So the idea is fib from high to low, 50% pullback, which has already happened, unfortunately, which I missed, and then take profit at the fib extension at the negative 0.618 level. Lee, it's a 24-hour trading marathon. I'm going to be using 1,000 to 2,000 leverage on a $500 account. And then at the end of the stream, so I'm streaming from New York Open until NFP on Friday. At the end of the stream, I'm giving away, if I make any profits, 50% will be given away. And I've got a sponsor that's also going to match the profits to give away to someone as well. There is no real reason behind it. It's not for charity or anything. I'm not that good of a person. It's just for some fun, really, to see what happens. And I'll be honest, a little bit of marketing, of course. So I need to stock up on Red Bulls and maybe some good stuff. Yeah, I'll see. I'll be honest, there's a pretty high chance I'll blow the account. I think it'll get to like 4 a.m. I'll get bored and I'll be very tired and I'll make a mistake and the account will blow. But that's not the goal, obviously. So we'll see. So yeah, it'll be interesting to see if gold can break past this this resistance level here. If we if we can break and hold above, I think the next stopping point would really be 3,400. Then beyond that, sort of the next high, and then obviously the next high after that. So it might be quite a nice idea to just watch and see if we can get this break and just take a trade right into there for a sort of an intraday position, basically just following the momentum. US dollar CAD is interesting when we get to pull back. Dollar CAD. Yeah, this one's just tanking, isn't it? I think this one would be pretty brain dead. I don't even really think you need to do much of a fundamental idea on here. So we're very clearly correcting this this left side here. So I'd have a take profit. Actually, I suppose at 1.35 makes more sense here. Just to round off the psychological level there. And then, yeah, just sell any pullbacks that come. To be honest, I'm a little bit surprised I've not really done anything on dollar CAD. But yeah, I think this also is a pretty good idea. I like it. When dumpster? No, I wish I knew. Okay, so Chris should be here in a minute or so. I'm not sure if he is already. I've not been told, so I'm just going to stay here for now. Okay. Futures options. Oh, ball out. You getting regulated? Series 3. Are you getting a Series 3 license? I did look into getting regulated and licensed, but it's just so not for me. I don't think it's the whole path for it is a little bit too long for this point in my life. Oh, you're both doing it. Yeah, I looked at basically becoming regulated to be an investment manager in the UK, but I've spoken about it before, but I don't know about the US, but in the UK, it's a very long and expensive process. To be honest, just isn't worth it because you can get regulatory umbrellas in the UK, which, if that's the route you want to go down, is probably a bit more cost efficient. Hi, good evening. Currently trading in prop firms. How can I check high impact news for NASDAQ? Well, you'd want to look at earnings, and you also want to pay attention to US news as well. So look at Forex Factory for day-to-day US economic news, and then you would use, I don't know, like Yahoo Finance or something for stock earnings. I don't know, really. I'm not a stock guy, but there's that, I guess. Okay, cool. Chris is here to take over the show. Guys, have a good one. Don't get margin called. As always, thank you for being here today with me. Don't leave when I leave. We've got Chris Pulver coming to take over, and I'll speak to you all very, very soon.
Hey everybody, thanks for tuning into today's A1 trading session. We love engaging with our audience, talking shop, taking requests, and sharing our favorite setups. It's about that time where we're going to review a bunch of indexes, stocks, currencies, gold, silver, Bitcoin, and pretty much anything else and share our insights. If you're wondering what trades I'm in, if you're wondering what trades I'm taking, and you'd like to see exactly how I'm trading everything, you can actually follow my trading signals. If that sounds like something you're interested in, we'll share a link in the chat and you can sign up. You can sign up directly with the link or speak to a support rep if you have any questions. If you're asking, what do I trade? Pretty much everything. Indexes, ETFs, stocks, options, futures, Forex, and crypto. Thoughtful analysis, active trading. Check it out. And now, back to the show.
Good morning, everybody. Happy Wednesday. Welcome back. Hey, let's go to a 15 to 30 minute time frame here. And everyone's wondering what's up with this melt up, right? I did a poll yesterday on my Telegram channel, and seems like, okay, here's my question. S&P hits all-time highs or US-China trade agreement gap filled? Right now, the poll shows about 71% of everyone thinks we're hitting all-time highs. So I'm just going to let this poll run for the day. I'm curious what your thoughts are too. We asked this yesterday. I think right now, I mean, based on this current structure that I see, here is a 30-minute time frame. If you just simply connect the lows, this might be stupidly simple, but if you connect the lows in this market, do you notice that these bulls have stayed intact? Yes or no? Look at this trend line. All I'm doing is connecting the April 7 low with the pullback low. That was that like Monday pullback level, and connect point 1 to point 2, and that has propelled this market higher and also provided this barely like this this like just sliver of support where this market's just grinding higher. But I don't think it's going to take much to turn the corner. The question is, will we turn the corner? Right? Look, today's Wednesday. Guess what happens by Thursday, Friday? By Thursday, by Friday, unless we are going higher to move further away from this trend line, if we go sideways today, Thursday, Friday is the window where I would say, look, this market might start to have an adverse reaction to this. That makes sense? So anyway, keep an eye on this trend line. I think we should watch it. I'm going to go to a 4-point here to make it a little bit more noticeable. And if the time breaks it or price breaks it, two things, right? If we break this just based on sideways price action, well, that's time. That's not really a catalyst to me. But if we have lows that are then breaking down, then sure, we're rediscussing gaps to get filled, previous levels of resistance, and maybe we have a pullback. So again, what are your thoughts? We hitting all-time highs first, or are we going to pull back first? I mean, either way, it's like it can disappoint a lot of traders, right? We go to all-time highs. Everyone that missed out on this dip is going to be disappointed. If we have everyone that's chasing all-time highs and it doesn't get there, everyone that's chasing all-time highs that got in late is going to be disappointed. So it's kind of an interesting situation for the market to cause some pain either way, and it's kind of what I like. In a way, it's like it just gives opportunities, because I'm hoping if that the all-time high chasers are or the bag holders here at the highs, it's like I just like to see a pullback. So anyway, we'll see what happens. Grabbed a few bucks today. We got a big level on the 6,000 handle on the SPX. So I wouldn't be surprised to see us hit 6,000 today. Markets seem to still be moving. I got out for a break even on a bull put spread, took some profit on an iron condor this morning. Here is the trade. So this is now trading for like 60. Yeah, that was up about 20 to 30 cents now. And this one is down to about $1. So yeah, about 50 to 60 cents on that one. So yeah, so far, I mean, it was just a chop fest this morning, which I was kind of happy with. ISM numbers came out better for services. That was the 10 o'clock news day for the U.S. Bank of Canada, did they cut rates? They didn't. I thought they were cutting rates this week. Wait a minute. Huh. Okay, I thought they were cutting rates. I thought ECB tomorrow and Bank of Canada, I thought they were cutting rates to 2.5. Am I like sniffing glue here? Did that happen? I swore I looked at the like Sunday Forex Factory calendar, looked at Monday's trading, like we had a 50 or 25 basis points cut. Huh. Anyway, and oh, okay. I looked at this incorrectly this morning. The ISM numbers, we actually had a sub 50 print for the ISM services. But the market doesn't care, because we're right back up where we started. If you look at price action this morning, this was your reaction to the 10 o'clock news. and 5 minutes later, it's kind of bottomed out, filled the gap, and then here we are right back where we started. So we're above the news candle. I'm telling you, I think 6,000 is likely going to get hit. I've got a pin around 59.90 right now. I'm surprised that thing hasn't taken profit yet. I've got an SPX double up here. I mean, I'm showing like 80 to 100% profit. Let's go. Just give me my trade fill. So dumb. Sometimes those like, it's probably better off if I did like a 10 wide versus 5 wide. Anyway, I'm trying to get a double on the trade. So we'll see what we get. So, I mean, again, correct me if I'm wrong. I could have swore this week on like Monday that the Wednesday Bank of Canada outlook was to have a 25 basis points cut. I know the ECB is supposed to cut tomorrow, so they're looking to cut another 25 basis points. Currency strength today, what's going on? So dollar weaker. Cool. Haven't seen that before. Dollar weaker. Japanese yen is starting to creep its way up. Dollar yen is now near the top of the food chain. Swiss has been Japanese yen, Swiss. You can see how they're moving in tandem. So not a ton of volatility, right? 30 and 45. So not a ton on the vertical axis, but dollar is slipping weaker today. All-time highs are within just a couple of percent. 2.73% from all-time highs on the SPX. And we've got to be even closer on the NASDAQ, 2.4%. The Dow, I think, is still around 6%, 6 or 7 maybe. About 5.9% to the all-time highs. Russell is still double digits. So in 2024, I had quite a good catch-up trade in the Russell, and that was pretty lucrative. This one, I'm not really taking the bait. We're 17% from the all-time highs. I don't know if the market's going to get what they like. I don't know if small caps are going to catch up. I think we're back on the coattails of riding Mag 7, riding large cap again, large cap tech, but we do not have the typical leaders in like a healthy bull market when it's led by utilities and it's led by consumer staples, it's led by financials, it's led by industrials. Like that's an interesting rotation for a bull market. I think we might be on kind of the, I don't know, the edge of a bull market, the final final legs of a bull market, but I guess it depends on this whole like beautiful / BS spending bill, which is really not a tax cut, but more of a tax extension and a way to still do what the government does best, which is spend a bunch of money, raise deficits, and just spend and print to oblivion. So eventually, I mean, that's what I said yesterday. Gold and Bitcoin, good diversifier. Silver's been performing well this week. So let's take a look at those. So let's go dollar index. 98.85. This should be helping my euro dollar position. I was hoping that euro dollar going into tomorrow's trading. So going into tomorrow's trading, can I get my euro dollar to spike up to this 1500, 1550 zone? I'm looking for a profit target there. I'm still up about 230 pips on the euro dollar trade right now. Let's go other dollar crosses, Aussie dollar. I don't like how this is behaving, although this is open space. Is anybody long Aussie dollar? And if so, what are you doing? Are you long here and then still wanting to buy in at a lower level? Like that's what I would be positioned for. Would be area 1, area 2 stop loss below lows. Open space trading up to like 6,900, 7,000. So it's not a bad spot. Euro dollar we did. Pound dollar still grinding higher. I don't like this one as much. I think euro dollar is a cleaner trade. New Zealand dollar also kind of the same thing. Had one pullback here at 58.50, and that's it. I'd like to see another pullback if possible. Can we pull back to 58.50 and then trade some open space? Area 1, I still like this kind of area 2 stop loss below. Profit target 63.50. Dollar CAD sliding lower. Okay, so what I'll be looking for here would be, I'll just draw a trend line. There's no reason to buy dollar CAD until this trend line breaks. If that is down here, cool. If it's earlier, okay, then I'll look for something on the backside of the trend line and then maybe use this area as my chance to buy support. Oil's been moving up a little bit though, yeah? A little bit. Oil's up just a little bit. If we get above $65.50 or $66, are we coming back up into the 200 moving average? It's been a resistance point, fake out, resistance point multiple times. But it's still stuck between the 65 ceiling and the 55 floor. Natural gas, UNG, just I've got a $17 call as part of my diagonal spread. So I want to make sure I don't want that called. Well, I don't want that assigned because it's just a sell call, but it's a spread. So I need to make sure that if it's above 17, let me set a chart line here. So if we're getting above $17, then the diagonal spread close or roll. So I'll either roll it out for more time and more credit, or I will close the whole thing with like a 5/17 and close it out. So I've got to, let me see what my overall debit is. Overall debit right now is $9.78. So if I got a $5 plus $9.78, $14.78, get a call away at 17, I make $222 on about 1,100 contracts. So make a few $1,000 if it's is greater than 17. But I could also still roll it. Okay, gold. Cool. Consolidate. I want to see gold consolidate more. I still like gold long a lot, actually. Not as much as I like silver, but I think gold just is going to give us a chance to accumulate more. I think traders just have to be patient, which is probably hard for many. But if we just come up to, I mean, we are kind of breaking this level here. So I wonder what that looks like. So I will say this, if the dollar index, if the DXY breaks the lows without showing really any signs of stopping, gold is likely going to benefit from that. So I think right now if the dollar stays range bound, so too will gold. And that's obviously going to be, what's the U.S. bond market doing? What about TLT? What about yields? But if the dollar stays relatively calm, choppy, sideways, I think gold's going to do the same. Speaking of GLD, I looked at this trade yesterday. Did we talk about it live in session yesterday? I think we did. I was looking at a trade here like a 265 and maybe have a profit trap. Let me see if I can get that trade to work out. It might require like 200 shares of GLD, which I don't really love, but let me have a look. Also, I want to take a look at MicroStrategy. We're at 377. So if I bought shares, it would be for a couple of these accounts, like this account are new. I've had these for only a few weeks. If I want to get a position going, I might look at a trade on MicroStrategy just to generate some income. So I have shares of MicroStrategy in. Actually, that's a new one too. I take that one for a little income. These accounts. So these three already have shares of MicroStrategy. I might add in a share. So let me take a look at this. So if I price this out, if I buy some shares right now, I want to see if I went out to maybe next week and I just sell it at the money. So if I want some price appreciation, I can, sell it. If I'm looking at, let me flip this around. So we're trading right now around 377. If I sell, let's say a 382. Okay, so I go from a 377.69 down to about 367. I could also have a put in here. So if I do a collar trade, and a trade like this, it's volatile enough, like I don't want to just sell a call, right? There's way too much of a drawdown potential. So I think I have to have a collar trade on here. I'm probably better off doing something like 30 days out. Get a little bit more premium, go out like 29 days. That gets us into July 3rd. Holiday trading, July 11th, maybe. I mean, fudge, it might as well go out 45 days. Okay, so if I wanted some at the money love, then I get, $3,000 for a 380 covered call. So I take a 377 purchase, I lower it all the way down to 347. If it gets called away, I make like $3,000. That's a good trade. Okay, now I'm not going to keep this full income because I think the smart thing is in case this price drops, I've got to have something to protect. So if I sell the 380, and let's say on the downside, maybe I make $1,000 on this trade. So I buy the 350. That's not bad. I mean, that's still a pretty high delta. Let me go like a 20 delta. So I can make about $1,800 on this trade. Still have some protection to the downside. My break even would be a 377.80 minus $18. So I mean, my break even's 360 on the trade. If it goes down, I can also use this like $13 debit, increase that. So maybe I lower the cost basis a little bit lower. But if it gets called away where price is higher than 380, I'm making $2,100 on the trade. And I could do that in 44 days. Possibly. So I'm going to kick that around for a little bit. That's a bit of a campaign trade. I keep saying this. I'm looking for income opportunities. To me, this is one where it's like I'll allocate the capital. It's going to tie up around, at most, if it's just a cash trade, it's going to tie up around $38,000. But if I could generate around $2,000, so make around $2,100 out of tying up $37,000. Oops, it's good math. 2,100 divided by 37,000. So make about 5.6% on this trade. Like, it's not a bad trade. So it's just income. Just move the needle a little bit. P&L year to date for 45 days. If we have a big shift to the downside, I can adjust my collar. I can take profit on the call side. I can take profit on the put side because it's a sell call for income. It's a buy put for protection. And yeah, I know it's a volatile stock, but overall, I mean, this is a big area, right? If MicroStrategy holds this level, okay, great. If MicroStrategy does not hold this level, well, that's why I have to have a put. I think that's the most important thing is I can't let this thing slip where it's like, well, I'm down $130 a share now. That's unacceptable. So I want to make sure I have some protection to still generate that pretty solid income because the premiums are outrageously good, but having protection is going to be key. So I'm going to write that one down. So MSTR. Okay, I'll price that one out today. All right, let's go back to gold and silver. Like I said, if dollar remains consolidated, so will gold. If silver is looking better and closer, I mean, come on, silver. Hi ho, silver. Get above 35. Let's see if we can break these highs. There's no such thing as triple tops and quadruple tops. There's no such thing as triple bottoms and quadruple bottoms. If this is going to break, this is open space. Even if I was conservative on silver, and this is a measured move, I'm just going to take this high, low, high, low. Let's box this in. Okay, I'll take this move right here. If we get a breakout on silver, the nice thing is this is the projection. I already have it based on a wave cycle. So if we break above 35 with some momentum, this could be a really good looking trade. Now, again, this is the destination, right? But how does it get there? Well, maybe it's a channel. So maybe we break above the highs, maybe we pull back again, maybe we get to the highs again, maybe we pull back again. Maybe this is the way that we get there, right? If that's the case, then we obviously have buying opportunities with higher lows. But if it just starts to run with some momentum, which you never know. I mean, if it runs with some momentum, cool. I'd be pretty happy at $41, but I would be thrilled at 45, 46, going up towards 48. That is the all-time high. 48, we get back to the 2011 high, which is the same high we had back in 1980. So if it is destination $49 on silver, sign me up. I want to be a part of that trade, which I am. I've been participating in silver since all this chop back in like 2022 and 2023. This first swing in silver, I started to position the portfolio to have some exposure in there. So I'm still just kind of, enjoying the benefits of it, but hopefully there's a lot more to go. Bitcoin has pulled back. We're at 104. I've got some IBIT levels that I'm buying into. This is what I was mentioning here, just wanting to see some efficiencies. Pull back, possibly even offering full accumulation back to 75. But this whole idea of like, I found a couple interesting charts that I was sharing yesterday in talk. Like I was talking about these yesterday, but now I built them out. So here is the S&P 500 compared to gold. Okay. S&P 500 in dollar terms is up at all-time highs. S&P compared to gold is way down. NASDAQ compared to gold is way down. Okay. S&P compared to Bitcoin is way down. NASDAQ compared to Bitcoin is way down. I think we should wrap our head around this idea that it's nice to have assets like gold in your portfolio, silver in your portfolio, Bitcoin in your portfolio, because they are appreciating in value, right? To say that the US market is going up, it's like, you know what the real test is? If you have the US markets going up, okay, look at the increase in money supply, because it's pretty much the same thing. It's like a 1-to-1. So you're participating in the markets to essentially just tread water and break even, because you're getting a debased currency pair and loss of purchasing power. M2, global money supply, it's like kept things going. You're just kind of keeping pace, but you're not truly gaining. So again, I mean, I know that silver and gold and Bitcoin, even, it's like they have their drawdowns, they have their volatility, they have their risk, but I think if we give them a fair shake over these next 5 to 10 years, I think we'll be pleasantly surprised to see where they go. Like the world seems to be making a much more aggressive shift towards non-US dollar assets, and that's a big deal. Like that's a big shakeup for the US. So and the US isn't going down with the fight. The US will fight, and we'll figure out something. Creative accounting. The whole world is tied. The whole world systemically, fiat system is tied. So it's going to eventually have to have like a reckoning. I just don't know when. You know, I think the financial markets are too big to fail, but it could be very disruptive. And like I said, I'm not bearish. I just need to know that I've got protection. All right, let's keep going here. Coin MicroStrategy. I'm probably going to grab some shares of MicroStrategy, add some income trades here. I think a good window for this would be try to participate in this through the holidays in July. Hopefully have no shenanigans like we had last summer. Like mid-July into August was a pretty nasty spill, but you never know. Is this market going to melt up to highs again? Is it going to pull back? It's just kind of, I mean, look, we really haven't gone anywhere for 3 weeks. Once we had that first flow through the US-China trade pause, it's right back at the same highs, but it's taken 2-3 weeks just to go sideways. Okay. Any individual charts you want to take a look at today? So we got Japanese yen creeping up here towards number 1 of the totem pole. Swiss is in second. Aussie's dropping a little bit. New Zealand euro, but dollar by far like just getting trounced once again. Okay. All I'm saying on the dollar is just be careful from selling into these lows. If the dollar ends up breaching lows, that's okay, but that could be divergent. Just saying, like I wouldn't be selling dollar without having a very aggressive like trailing stop loss. Like if you're already in profit on, this pullback here, selling the dollar, cool, break even. If it hits the lows, trail that stop loss tighter. My euro dollar trade, if that hits the highs at 1500, I'm probably getting out of that thing. Right? If we come back up here and tap, like I'm going to set a chart alarm at 1500 actually. So I'm going to go 1500. Okay, so if we hit 1500, that trade is good enough. I mean, 1550 is my profit target. It's right at that high. But if we hit 1500, I will take my 315 pips and say bye. Palantir, let's take a look at that one, Lewis. Palantir, I put on some ratio spreads on Palantir. I've got one out to the end of the year. I've got a couple trades in here. I'll show you. So Palantir. So I have I kind of constructed a trade here this last week. So this is a ratio spread that is already up around 180 bucks, and that's only about 35% of the profit. So there's still more to go. This trade ultimately should be about $500 of income, and then this trade is a 1111 trade. A 1111 trade, which gives me a trap. So the 130 by 125, that's a bear put trap. So if I make some money in that trade, that would give me about $300 to $400, and then I have the income side for another 250. So this trade could potentially pay me another 500 bucks. This one's going to take some time, but I'm looking at it this way: if Palantir from 130 to 125, if it goes lower than that but stays above 60 bucks, okay? So basically anywhere in here, I make money, and I make about 500 bucks. So if it goes higher, I make $2.80. So I don't make 5, I make 280. Okay. So and plus there's a lot of room for forgiveness here, right? Palantir could have a bit of a spill. We could roll over a little bit. We could have some volatility. We can come back into the halfway point of this crazy range we've maybe been establishing. But my levels are all the way down here. So we'll see. It's not without volatility. I know that. But I mean, Palantir has been getting a lot of nods as a awesome stock and doing all these fantastic things. Their valuation is like outrageously high. But I don't know. I wouldn't be surprised if Palantir is going to be maybe one of our bigger stocks. I mean, it's a $300 billion market cap. Is it possible that in the next 5 or 10 years this becomes $1 trillion? I mean, we could be talking Palantir and a handful of others that are now the new Mag 5 or the new Mag 7. It's just different stocks, different names now, right? If all of a sudden, growth slows on Apple or stalls on the Mag 7, or people are just rotating out of the Mag 7 like they did earlier this year, Palantir might be one of those household names all of a sudden. So we will see. Sometimes with big money and big money and big flows come big responsibilities and big problems. Ask Kathy Wood when her ARK fund, basically this ARK disruptive ETF. I mean, when this thing was ripping, this would have been back here in 2021, 2022, before the bear market happened, post COVID. Kathy Wood's fund was sitting on like $100 billion, and then it went bye-bye. Right. And now, Kathy Wood and Jim Cramer have inverse ETFs based on their trade calls. Do the opposite and you make money. Like, that's unfortunate, but it was such a ridiculous move over a couple years. So, I mean, this is what happens when you get married to stocks. They do extremely well. They're the belle of the ball for the portfolio, and all of a sudden then they're not. So that is why at the end of the day, if you want to see something long-term and sustainable, you got to love the company you're holding. And I think current Mag 7s, like they've been some gems for a long time, but this is why you look to the indexes. The indexes are designed to benefit from the best companies in the world. So if Palantir takes the reins and runs with all-time highs and just can't be stopped, well, Palantir and kind of companies like that will still help the S&P perform better. So that's why I'm a big believer in just like having some index exposure, but also actively trading options around them so you can still generate the income and hopefully, edge out some extra gains. Make sense? Yeah. So I've just got some wide margin for error on Palantir, but I've got some income trades there that'll make me for these accounts, probably, I'm not sure how many. Let me go to these accounts. I know it did. All my PM accounts did it. So I'll go 111 here. Group 1111. This one did it. 1111. This one just has ratio spread. Ratio spread. This one, I think I did both. Yep. Okay. Ratio spread. Ratio spread. So these last two accounts have it too. All right. So the way this will stack up is how many. So 250. That'd be worth 500. 250 is 750. Another 500 is 1250. Another 500 is 1750. 2250. 2500. 2750. 3000. 3500. 4000. 4250. 4500. 4750. 40 or 5000. 5250. 55. So 5750. So about $5,700 with just options, no ownership. If prices go my way, I've got about a 90+% chance profit on these trades. I'm going out plenty of time. We'll see. I mean, there's margin for error. I know there's volatility. The valuation's crazy. It's probably excessive, but doesn't mean the Palantir is not beloved right now, and it's been performing pretty darn well. Okay. All right. What else? We did dollar, oil, gold, silver. We did Bitcoin, MicroStrategy, copper. Is copper running hot? Not really. I'm hoping we still stay range bound in copper for my little lottery butterfly. Japanese yen, yeah, we'll see. Chart alarm set at highs. FXY is how I'm trading the yen. So if we get a longer move on the yen of Japanese government bond yields, JGBY, what the heck's the symbol for Japanese government bonds? There it is. Okay, JP30. So the JP 30 year peaked around 3.2. The JP 40 year peaked around 3.7. That's a big drop here. Wow. That's a big drop recently. This could be the blind spot in the markets for 2025 if we have another Japanese yen based event or another Bank of Japan based event. We'll see. I mean, this might be taking some of the power away from the U.S. dollar, and it's just the bond market. If we're looking at U.S. 10-year, U.S. 20-year, it's like 10-year yields are dropping a little bit. Okay, U.S. 20-year yields dropping a little bit. Interesting. U.S. 30-year yields dropping a little bit. Okay, a little bit, but we're still. This is what I keep watching as a benchmark. Liberation Day. We're not even close to it. We're still another 20 to 30 basis points away and higher than the Liberation Day announcement and that little, snafu in the basis trade. Okay, TLT making a freaking run. Good. I might be able to get out of my TLT trades. So my TLT exposure is just a diagonal spread, and I'm going to keep a close eye on this one. I think I have it covered at 89 right now. So TLT diagonal spread is a 65 by 89. So if we get above 89, I'm getting this thing called away. This should still make me a couple of bucks. I've got a lot of contracts here. This was a 2-year trade. I'm in these to January 2027. So I'm giving it all of this year into next year. I've got plenty of time to just sell the call side of this diagonal spread like every 30 to 60 days. But I'm also not wanting to have a ton of TLT exposure because I don't know how bullish this necessarily gets. If we have like a little relief squeeze, that's fine. But I think this is maybe at best going to be a range. I think if bond traders are lucky, they see it go sideways and stay stable. But if all of a sudden we make I don't know, I think we could pop up here on a squeeze because we're sitting at pretty strong support. But I'd still say this thing is maybe range bound at best. So I'm going to try to let it go at range highs, give or take. So anyway, chart alarms are set. There's 89, there's 90. If we hit, 89, I'm looking at getting rid of that diagonal spread. My expiration is out to the end of this month. So if we get another little rally here, also it's interesting that if we see the bond market going up, if the bond market is going higher, does that also mean that maybe we're getting some? Is it just because it's so cheap, or are we going to see stocks go up and bonds go up? It's usually not the correlation. So anyway, something to keep an eye on for this week or this month. Mag 7, still pretty sideways. I'd love a dip and a pullback on mags if possible. Apple still hanging in there about $200. Amazon, same. Like, these have gotten pretty boring. AVGO just ripped. This is overbought with divergence, so I wouldn't be terribly shocked to see AVGO have a pullback. Not sure what this is going to look like with a call trade, but the volatility should be okay. If I did, we have earnings on June 5th. Oh, I see. That's literally, let me price that out actually. I didn't realize we had earnings this week on Broadcom. I thought most earnings season was slowed down. So option slam, AVGO. So expected move is about 15 to 16%. It's a lot of single digits in there. And earnings is this week. Is that right? So this week, June 5th, that's tomorrow after the bell. Okay, well, let's see. I think I like this trade. It's overbought. I wouldn't mind selling some premium on this one. Maybe a broke wing butterfly, maybe a yeah, let me see. So it shows the average is about 15%. We're trading at 261. That's a pretty big move. I'll look at the difference between what their history shows. So 0.15 times 261. So looking for about a $39 move. And the broker says that we're going about $17. Okay. Well, the broker says by this Friday, $17. Okay. Well, let's have a look. So earnings on the call side, about $20. So unless this like blows higher, I'm going to take a look and see if I can do a call fly. Put this at the top of the expected move. So 275, 280. That's a $19 move. That's close. It's kind of flirting with fire a little bit there. But I would say if we get this trade to fill, this would be like a post earnings trade. That's not bad. I think this credit is garbage though. I would try to take this trade if it fills for maybe. This is going to be a hard fill, but if I got this filled for $1, I would try to take this trade. My pin price would be $24 higher. Expected move is 17. Two ways to play this. There's two trades I'm thinking of. So if I had a $24 move on a 261.28 stock, that's giving myself about a 9% move. Okay. Excuse me. The other side of this would be, I mean, I can iron fly this thing if I were to sell, and then buy 10 wide and 10 wide. You're on camera. Hang on a second. Okay. So if I want to go right at it and say, I don't think we're going to have a move outside of $14, I can take that trade. That's a bit more risk. I think it's better to take the butterfly. So I'm going to go butterfly, put this thing at the expected move. I wish the strikes were a little bit more precise. This is one thing I've been noticing for some of my trades is I'm not getting the precision in the option strikes that I want. 5 wide, that makes it a little bit more challenging. So anyway, if I did like a 285 and I do a skip. So this would be risking 476. If I want to go a little bit wider, risking 1,000, that's a little bit too rich for a little earnings play. So I'm going to try to get this trade to fill for, I'm going to go 90 cents. 90 cents credit. This will be after earnings. So do we have like a $20+ move to the upside, and then do we fade? Yes, no, maybe so. So I'm going to try to take this trade. All right, so I'll throw this in for Pulver alerts. Here's what it's going to look like. Let's go option strat. I'm going to build out a butterfly. So this is AVGO for the 6th expiration. So the 295, 285, and the 280. So I'm buying the 280, selling the 285, and then selling or buying the 295. So range is here. Apply volatility is about 114%. Wow, that's quite high. So this is what the trade would look like. So it shows I can make a whopping 22 cents on it. I'm not going to take this trade for right now. I want to see if this can go up a little bit prior to earnings tomorrow after market. I want to see if this will get me filled. I may accept 50 cents credit on this one. If I get 50 cents credit, I like the trade. But what this does is this allows from current price about a $24 move. Okay, a $24 move, which is about 10%, all in a day. So if I really wanted to like take one deeper dive into this and see like how good of a probability is this trade, I would take this and go into the post earnings. So how many times in one day do we move over 10%? And you can see that it can happen, right? It can certainly happen. So in one day, so we'll mark this out right here. 8.6, 24, 10, 12, 6, 2, 5, 2, 5, 2, 1, 2, 3, 8. So most of the time we don't go 10%, right? Most of the time we're only getting about a 1 to 3% move, and then it gets juiced after the fact. So for me, the probability is I don't think we're going to go 10% by Friday. If we do, then I'm probably going to take a small loss on the trade. That make sense? So the other way to trade this would be maybe going out a week and see does that fade. We go from 24% and then we rip up to 30. So it's like there's still follow through. We go to 10% and we fade back to 3%. We go to 12%, we go to 16, 22. It's like there's potentially follow through, but most of the time we're not moving 10% the day of or the day after earnings. Okay. All right. So I'm looking at a 285. 285. So we'd have to have about a 9% move for my trade to be threatened. And I mean, also the reason I'm taking that trade is this thing erupted higher, little bull flag erupted higher. Are we overbought? Yes. Do we show divergence? Yes. Do I think this goes up higher? It's possible, but I think that would be faded, So I don't know. I'll take a chance. Trade is in for 90 cents. It's pending. It's not filled yet. It's only offering about 22 cents for today. So this trade may not fill. If we're coming into earnings tomorrow, it may not fill, but it's okay. The other way to take this trade, I'm like, I guess if we did, this is one way I would consider it too. If I don't get filled on the earnings trade that I just put in, if this goes higher, what I might end up doing is some type of like call condor, which is a fancy way of saying, I think that this market gives me like a trap here and then takes on some risk, but I don't think we're going to necessarily go too much higher after even an earnings pop. If we go earnings pop higher, I don't think this goes too much higher. Because all of a sudden Broadcom's going to be like, oh, this thing's up 90% since April lows. Not a lot of stocks have done that. I don't know. I guess you can thank Nancy Pelosi for having the stock rip because this is one that she was actively participating in. You found out, Nancy Pelosi bought Broadcom during the CHIPS Act. Well, it seems to be doing pretty well. So anyway, we'll see what happens. All right. What else? I got some trades to price out. Want to get some MicroStrategy in. I've got to price out some trades from one of my services, Pinch Point Scanner. Found some good trades yesterday. Looking forward to doing the session with Nick for the mid-year review. Got that content ready, lots to discuss. If somebody asked about Ethereum earlier, we'll do Ethereum. I mean, Ethereum to me is like it's just a bull flag. I mean, if you like Ethereum, I'm more Bitcoin. I was Ethereum back in the day, 5-6 years ago. I liked Ethereum, kind of had them play parallel to each other. I had my ups, I had my downs, but I like Bitcoin a lot more. I think Ethereum has the potential catch up. I like that trade. I was in Ethereum like literally, through this rip, but as it declined, this trade got me in some income. Like I had lows in here with some ratio spreads. That little pop back up there made me some money. After that, I said I'm not going to trade it. So now we're on the right hand side of the trend line. I mean, it looks like a catch up trade. I mean, it can consolidate a little bit. If it pulls back, it's understandable. We don't take out the swing low. It's like this to me looks like a really nice swing trade. So just as a trade, it's sitting above the 200 moving average in a buy zone, a little pullback, buy the dip, see if this thing wants to catch up, get back to these highs. It's not even at all-time highs, by the way. That's like the big catch-up trade would be up above 5,000. So I think from a technical standpoint, like it does have good potential. I mean, it has good potential. There's all-time highs. There's a swing trade risk. If you're buying small in these two spots, I mean, your risk is there and there, a lot more potential reward on either side. So if you like the trade, I still like the trade. It still looks good. Position on Dell, I do. I've got some ratio spreads on Dell, I believe. Yep, ratio spreads. Currently up about 23% of that max credit. Again, way out of the way. A lot of my positions I'm positioning for, a lot of forgiveness, like margin for error, a lot of forgiveness. I was doing a lot of premium selling during the April sell-off. So yeah, Dell's one of those trades. So Dell is right here. 113. My margin for error is we could drop all the way back down to April lows, and I wouldn't really have any risk. So I mean, that's what I'm doing. Do I like it a ton? I mean, I don't know. I mean, Intel is another one. Intel's trading at 20 bucks. Is Intel going to be a stock that comes back to $25, $26? I hope so. I mean, I have some shares. I've got some collars. I need to do something to lower my cost basis, but my break even is about 29 bucks or 21 bucks. So if it gets up to 25, 26, I'm taking profit. I don't need to hold this thing forever. Is Intel going to return into the fold as like this, behemoth chip maker? Maybe. Are they going to be a prime competitor to NVIDIA? Maybe. But until then, like, why are other chip makers crushing it right now? And this one is the same levels we've seen since literally the dot-com bubble. That's insane. But if you look at the fundamentals, I mean, Intel looks pretty good. It's certainly cheap. It's just, is that going to be looked at as a value play? Doesn't really have a lot of risk fundamentally. That's good. Price to earnings, totally reasonable. Price to sales, really reasonable. Fair value, I mean, it's way undervalued. I wouldn't mind seeing that, right? So, but am I going to hold it? Probably not. I'm happy making $5 a share on a stock like this that's consolidated for a decade. It's like if we go $5 in range, I'll trade the lows and I'll get out of the range highs. Okay. All right. Anything else? Think that will maybe do we have anybody else coming on? I took over after James. Anybody else coming on, or am I the closer today? Chandler and Co. We do some more currencies. The closer. All right, got it. Let's see here. Let's go market breadth for a second. Just curious. So it wasn't that long ago. This is just a few days ago. This would have been March or May 20th. I did look at some ETF. If you go to ETF.com, there was an interesting print. The last couple of weeks have been ETF outflows. But we did kind of peak here. We're about 81% of S&P stocks are above the 50-day moving average. We are now still like less than half the stocks are above the 200-day moving average. NASDAQ, We got a lot of stocks now, 82% of NASDAQ stocks above the 50-day and about 60% of NASDAQ above the 200-day. So, I mean, NASDAQ has been performing better, a little bit more reflexive and resilient. It was hit worse in the sell-off. I mean, it was down 27% from peak to trough. But I just wonder, that's why I pose this question. Are we going to hit all-time highs? We're going to fill that China-US trade agreement gap. Because if there's time in this market, maybe nothing matters. Now that it's summertime, maybe it's just drift. Maybe it's, path of least resistance. If we get up here towards a market breadth top, then that's maybe the timing. Right? Maybe. But I also go back to, I'll wrap up with this today. This trend line is something we should definitely pay attention to. Okay, that connects the April 7 bottom with the pullback here from the 21st, and this market has just been like, I'm not going to say explosively higher. It's just been steady. It's just been steady. It's been a recovery. It's been, repairing itself. But like I said, time can get us on the right-hand side of this trend line, right? And time and price can play a lot of funny games. I mean, we could go sideways here and price can go up and then fall, right? I'm just saying, like, don't overlook the fact that if we get on the right-hand side of the trend line, the bears that have been possibly waiting or maybe even interested for confirmation are possibly going to get it. So the ways the bulls can stay in control is just by keep grinding higher. So if this trend line holds, it holds. But if the trend line gives back or breaks, I would think we have, easily 3-5% corrections, maybe 5 to 10% corrections, and things might get a little gnarly. But until then, trend line is what it is. Like slow and steady. No major news. I mean, today we got through ISM, we got through ADP non-farm. We have the real non-farm on Friday. We have ECB tomorrow looking to cut rates by 25 basis points. We'll see what that does to the currency. I'm going to see if that DXY wants to tap those lows and my euro dollar wants to tap the highs. So hopefully I will be closing out for, that's why I had the chart I'm set at 1500. 1500 is good enough. Okay, I've got it set at 1550, but good enough if we tap the round number at 1500. Okay, one last look at currency strength. It's just dollar. Dollar's getting beat up. I put in that trade on AVGO. It's a pending order. It hasn't filled yet, so maybe it doesn't fill by tomorrow. It's got to be filled by tomorrow because it's after market tomorrow. Okay, what I know that I don't want is I'm not like buying premium on that stock. There's just way too much expected movement. So, all right, and then for today's short-term price action levels that I'm watching, I think we are going to try our darndest to maybe sneak up here to this like 59.95, 6,000 level today. I can't believe I've got this like little SPX butterfly trade that hasn't closed out yet. Like, I mean, it's sitting at, it's within about, I mean, I guess it's because it's 5 points of my strike, but if we go up to 59.90, 59.95, tap 6,000 today, like this should be hitting some profit. Come on. It's literally sitting right there. Like it's sitting, hovering around my mid price to close out. Like, why wouldn't it close? Maybe I might have to hang out in this trade until maybe noonish. So in the next like 45 minutes. So anyway, what do you think of Elliott waves by means of analysis? Here's my Elliott wave. I'll do it in 2 minutes. Here's what I like about Elliott wave. It's got to be super obvious. Okay. If I can go 1, 2, 3, 4, 5, or we'll go 4, 5, kind of picture perfect Elliott wave. Okay. Number one, to me, if I'm saying this is a wave 1, it is a major, major, major low. My favorite trade is participating in this, buying the pullbacks of wave 2 to participate in the run of wave 3. So the way I make the most money with Elliott wave would be this. If I'm participating in number 1, if I'm finding this low, I can participate in that for a pretty good swing. And that swing might take out previous highs. And so that's kind of my way of doing it, right? If we get a swing that takes out previous highs, that's when I'm taking profit on wave 1. Then I swing trade by leveling into wave 2 and try to get as much of that symmetry as I can. If I really like the trend, then usually through wave 3 and 4, I take profit at symmetry, and then I kind of dollar cost average back into previous highs becoming support, and then a wave 5. Wave 5 is like the slowest wave. It usually is the slowest wave. It's still steady. It's still a bull trend, but it's not my favorite. So most money I make is going to be wave 3 symmetry, right? I find a low or bottom, then I can participate in wave 1. Wave 3 is my easy, like strongest trend in the market, biggest impulsive wave you get. And then wave 5 is, you got to be ready for wave 5 to be, okay, it's going to go a little bit higher, still participate in the trend. But then also, as far as the turning points go, I like selling wave 5 tops, right? So this is, if I look at Elliott wave, this is how I trade it. If I can find a low and participate in a wave 1, that's a pretty good trade, right? There's some momentum there that creates an impulsive wave. You're looking for the follow through to get symmetry. I make the most money on these two sessions, or these two sections. Finding a bottom wave 1, participating in a wave 3, and then after this trade is done and exhausted and overbought with crazy amounts of divergence, then I look for a simple ABC correction, like a 1, 2, 3. That's about as simple as I make an Elliott wave. If you try to show me a chart that's like, this is Elliott wave with like a little Roman numeral and a sub count and lowercase letters and capital letters, I don't care. Like, I'm looking at it from a simple 1, 2, 3, 4, 5 and an ABC pullback. That's it. Like, I don't want to make it any more complicated than that. I can see that. And if you can't see that, you got to make up all these sub waves and it becomes very subjective. That's not Elliott wave for me. To me, this is just, it's 1, pullback 2, push 3, pullback 4, push 5, 1, 2, 3. That's Elliott wave. The way I make money is there, and there. So I'm not participating the entire time. There's obviously like a time and a place to do it, but it's plenty lucrative. Okay. Is it in the stock market? Yep. Is it in futures? Yep. Is it in Forex? Yep. You can use fibs along the way. You can do all sorts of stuff. Okay. Tried it on DXY wave 5, maybe. Well, where's your wave 5? So let's go weekly chart. So where are you going? 1, 2. I mean, I look at this as potential symmetry. That's what I'm seeing. So I look at wave 1, 2, 3. I mean, that symmetry, I have that. I already have it noted. I mean, our chart here. What workspace am I on here? I need to go back to the SPX here. SPX on the 15-minute. There we go. There. I'm going to go back to DXY. I've got symmetry noted. So this box is this is actually my wave 3 symmetry. So high to low. This is all choppy. Wave 2. If this is wave 3, that's symmetry. So around 96. And again, I'm not claiming to be like this Elliott wave pro. I mean, some people would take Elliott wave and make it look ridiculous, and maybe they're better at it. But I do like symmetry in the market. I think that the market is really impressive sometimes when you can measure a move, project that move, and it hits it. And that's oftentimes, a lot of times, my profit target. And it's easier to hit. Like, symmetry is easy to hit. If A to B equals C to D, it's just math. And it's funny how that stuff is kind of self-fulfilling. Okay, use the day chart. Gotcha. I mean, I'm on a day chart too. I just have it compressed. Where are you starting? Are you starting from this high, or are you starting from this high? I don't know. And this is what makes it confusing, because it could be super subjective. Your starting point, my starting point, your sub waves, like, it's all different. That's what I don't love about Elliott wave. It could be very, very unique to the user. So I try to keep it as clean as possible. If it doesn't look obvious, then it's not really an Elliott wave to me. So you started here back in September 2022. Yep. Okay. Fair enough. All right. I'm going to wrap up for today. I got to jump on the road here for a few minutes. I'm coming back. I've got sessions this afternoon. I want to get some trades running on MicroStrategy. Got to price out about 4 or 5 trades today, see if I can take them, and look for those in the Pulver alerts. MicroStrategy is going to be a bit of a campaign. It's going to be pricey. If you want to take that trade with me, I'm probably allocating about $37,000 to it. But I think it's something I could generate probably $2,000, $3,000, $4,000 to make some income, and also have some protection. So if it gets a little crazy the downside, I still want to generate the income, but also have the protection. That's why I'm not just going to go out week to week. If I was just going to sell a call, actually, you know what? Maybe I'll do this. Maybe I'll buy a put for a week and then sell a call out maybe 30 days. Actually, I switched it around. Buy a put out about 30 days or 45 days and then sell calls every week. Premium should be pretty good to do that. But then I just want to see what the numbers are. Okay. All right. I'll let you go. Have a good rest of the day, and see you soon. All right. Bye.
Thanks again for watching today's show. Our goal at A1 Trading is to continue to share free value to our audience through daily videos and articles, keeping you up to date with the latest market coverage. If you enjoy our content, make sure to subscribe for more. From all of us at A1 Trading, have a great day, and we'll see you next time.